Yes, good morning, everyone.
Good morning, sir.
Good morning,
Good morning,
sir.
sir.
So, did you all revise what we learned yesterday? SQC1. Yes.
Yes, sir.
Yes, everyone. SQC1.
Yes, sir.
So, do you think? And also, I told you to recall Essay 200 as well. Just go through that. Did you do that? Yes or no? No. So, today we are gonna cover what? Essay 200 series. Entire series will try to cover. Let's see in bits and parts, breaks, how much we will try. We will definitely not try to rush into, but significantly cover each and every standard with the utmost priority to each and every topic that might again come, or which are again very much frequently asked in the test or in the exam, or also not yet asked but is important from the point of view of exam. So the essay 210, we are going to start with essay 210. Essay 210, agreeing the terms of audit engagement. So that's rhyming, right? Essay 210, agreeing the terms of audit engagement. Essay 210, agreeing the terms of audit engagement. Objective here is the for us to agree with the management on the terms of the audit engagement. We need to agree with the terms about the how audit are gonna perform by the auditor, what is the management's responsibility, what is the auditor's responsibility, what is the FRF under which the financial statements will be prepared by the management, correct, and what is the reporting framework, auditing reporting framework which will be used, or the report by which the report will be created by the auditor, the report which will be written by the auditor, what is the framework of that audit report, framework of that financial statement. So everything has to be agreed upon between the auditor and the management, so that there is no confusion later on, there is no overlap later on the part of the audit. So agreeing the terms of audit engagement, here the objective is to what? To accept or to continue only and only. That means auditor can accept and continue the audit engagement only when it has been agreed upon. It has been agreed upon when the basis upon which it is to be performed the audit, that is the audit which we have to perform, has been agreed upon through either establishing preconditions for an audit are present, or confirming that there is a common understanding between the auditor and management. So that means what? We have to do two things here in essay 210. Firstly, we have to see whether preconditions are present or not. Preconditions for an audit, are they present or not? And here again a separate question can come, therefore what are preconditions for an audit? Preconditions for an audit, are you getting it? What does it mean? That means what? You cannot accept the audit until and unless there are these conditions accepted by the management. That is, preconditions for an audit are there, these are present with respect to audit, then only you will accept the audit. Similarly, you want to acknowledge that there is a common understanding between you and between the management, similarly between the TCWG as well as the terms of the audit engagement. So what we are here going to do, two things in essay 210. Firstly, preconditions for an audit are present or not, and secondly, there must be an agreement with respect to the audit, with whom? Amongst auditor and management and TCWG. There must be an agreement between the auditor and management and TCWG with respect to the engagement, common understanding between the auditor and the management. So what are preconditions for an audit? Important preconditions for an audit. That means what? This has to be present, then only you can accept the audit. This has to be there, then only you can accept the audit. That means what? Use of management of an acceptable FRF. What do you mean by FRF? Is financial reporting framework. So financial reporting framework is what? Financial reporting framework is what? But nothing but your accounting standard, technical standards, your schedule 3 framework. The framework is been given under schedule 3, right? How are you going to disclose the financials? How are you going to disclose in the notes to account what all things has to be disclosed mandatorily? Interest rate has to be disclosed in the case of India's 19 when you are disclosing PVDBO account, defined benefit obligation. What is the interest rate you are assuming? Similarly, borrowing cost. There are so many disclosure requirement or the framework that is being provided by the schedule 3 by India's or accounting standard. So these are all what? Remember, these are all our financial reporting framework. These are all our financial reporting framework. That is the framework through which the financials are reported. The framework. So that is what we have to see, that the FRF that is used by the management is acceptable to the auditor or not. The FRF which is used by the management is acceptable to the auditor or not, in order to establish whether the preconditions for an audit are present, or the auditor will do what? The auditor will determine whether the FRF which is used in the preparation of FS is acceptable or not. So FRF must be acceptable. Secondly, is they have to obtain an agreement from the management that the management acknowledges and understand their responsibilities. Management will give an agreement to the auditor that okay, we are agreeing with you and we acknowledge our responsibilities, don't worry, we will be providing it you with these three information A B C. We acknowledge these 3 points, the our responsibility with respect to A B C, we acknowledge it and confirm it to the auditor, and therefore what our responsibilities has to be agreed upon by the management. Management will agree that the financial statement is prepared in accordance with the applicable FRF, and that the financial statement preparation is whose responsibility? It is the responsibility of management, right? So financial statement preparation is the responsibility of management, and therefore FS is prepared in accordance with applicable FRF. This is the responsibility which is agreed by the management. Similarly, don't you think for the purpose of creation of the financial statement without any fraud or error, there has to be a strong, robust internal control in the entity to be present for the financial statement to be free from material misstatement, whether due to fraud or error. There has to be a certain internal controls present in the entity, and whose responsibility is there for the purpose of exercising necessary internal control. That means implementation of internal control. What do you think? It's the responsibility of auditor or management?
Management, sir.
Management, right? So again, management responsibility, they will agree that for the purpose of creation of financial statement that are free from material misstatement, whether due to fraud or error, we exercise necessary internal controls. And thirdly, they will agree that they will be providing to the auditor all information, any additional information that the auditor requires, that also they will give. And also they will give unrestricted access. That means what? If suppose I want to visit the client office and want to talk to employees of the organization, or want to talk to any sort of thing, or any sort of access I want, then management agrees that they are gonna provide unrestricted access. Yes, you can go and talk to my employees. You can have access to the financials of the entity, books of the entity, and whatever access that we as an auditor require, management agrees to give us unrestricted, no restriction as such to the access. So you have to repeat with me what 3 points management will be providing to the auditor. Come again. All information, additional information, unrestricted access. 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 So all information will be provided. Any other information, additional information that you might require, that also will be provided. And unrestricted access. Unrestricted access. So preparation of the financial statement, that has to be is the responsibility of the management. Then again, internal controls to enable the preparation of the financial statement, that is the responsibility of the management, and management is responsible to provide with the auditor with all information, additional information, unrestricted access. I hope preconditions is very much imbibed, impressed in all your brains, right? It is very easy. 3 points are there. First is financial statement preparation, second is internal controls, and third is to provide with the auditor all information, additional information, unrestricted access. All information, additional information, unrestricted access. Preconditions for an audit. Now then, the preconditions for an audit are present. Our second objective was to confirm upon the common understanding has to be agreed upon between the auditor and the management. Common understanding has to be agreed upon between the auditor and the engagement. So there has to be an agreement letter, there has to be an agreement between the auditor and management, right? So agreement has to be in writing. In SA 210, agreement has to be in writing. That is what they say. Auditor shall have to agree the terms of the audit engagement with the management or TCWG as appropriate. And these agreed terms shall be recorded. How do you think they will record it? Of course, obviously in a written agreement. It has to be recorded obviously in a written agreement. That is what I was saying, that the engagement letter, agreement letter has to be in the written form. What do you think will be covered in the engagement letter? It's very easy. What is the characteristics of the engagement? Why are we employed for doing the audit? Are we going to do tax audit? Are we going to do internal audit or any statutory audit? Or we are only going to do assets, check assets and liability? What is the scope, characteristic, timing? Everything has to be specified in the engagement letter, so that there is no confusion later on, there is no fight later on. So agreement with the management will include, first point, characteristics. What is the characteristics of the engagement, right? Scope of the engagement. Scope is asset only or asset, expenditure, income, liability, everything. And then timing of the audit, by what time I have to submit my audit report, or by what time the financials will be given by the management. Everything has to be there in the agreement letter. First point. Second point, what are my responsibility? Me means auditor. What are the responsibility of the auditor, and what are the responsibility of management? What are the responsibility of auditor? What is the responsibility of management? And again, my responsibility is to issue audit report. So the responsibility here is to, that is what we need to agree upon is to what, that there is a framework in which audit report will be framed, and that report is already been agreed upon in the engagement letter. And if at all there is any deviation in the reporting, that is if there is any deviation in the form and content of any sort of reports which the auditor needs to issue, then there will be circumstances in which a report may differ, and then that will also be communicated. In case of any certain circumstances where the report that is being issued, the format and content of that report is gonna different with the expected form and content. What we knew that the form and content will be in accordance with, suppose, SA 700 series, SA 700 reporting form, content, everything is given there. Now we are reporting in a different form or a bit different than what was accepted, then that is also to be agreed upon in the agreement letter. And then lastly, management responsibility is to identification of the applicable FRF for the preparation of the FS. That is what I am linking through the points. See, it is very easy to remember. First is what, characteristics. Then second is responsibilities. So responsibilities, if you see, responsibility of the management, responsibility of the auditor. And then I told you what is the responsibility of the auditor? Responsibility of the auditor is to issue audit report, right? So audit report, form and content, and any deviation. Similarly, management's responsibility is to FRF for financial statement preparation. Correct. So this is our agreement letter. Very important question. Agreement on audit engagement terms. Agreement on audit engagement term. What all points will the auditor agree? Agreement on audit engagement terms. Clear, everyone? So last point it says is very important. If suppose law or regulation already prescribes the agreements form terms, if suppose law or regulation prescribes in sufficient detail the terms that needs to be there in the audit engagement letter, suppose example, suppose tax audit, it already states how are you going to report in form 3cd, right? How the reporting has to be done in form 3cd, everything, format, reporting, everything is specified in the law and regulation itself. Then in that case, do you think that will again separately be in the engagement letter mentioning that this is gonna be our format? No, if the law or regulation already specified, that is obvious, it is by customs, by tradition, it is obvious that the format is gonna be according to that particular law or regulation. So in that case, auditor need not record them in a written agreement, except for the fact that such law or regulation applies. So that you have to mention this only in your agreement letter. You have to mention only that much, that there is a certain law or regulation that applies, and therefore in accordance with that laws and regulation, reporting format is not separately discussed. However, we want your acknowledgement, that you acknowledge as that this law or regulation exists. That means what management should acknowledge, that okay, they are aware about this law or regulation, and therefore that points related to those law or regulation might not be inserted in your agreement letter, might not be recorded in your agreement letter, if and only if law and regulation provides so, and the management acknowledges that law and regulation. Clear? Last point. Is there any doubt in this answer or the preconditions to an audit? It's very easy. Start trying to retain the topics as well, right? There here in essay 210 we are going to study 5 6 topics, so you should also try to structure each and every standard. So standard preconditions were there, and then we have to agree upon with the management, right? So agreement letter, what is gonna be included in the agreement letter. Similarly, few more questions we will have to see. So agreement, we've seen agreement on audit engagement terms. Again, if I want you to just quickly, objective and scope of the audit, objective and scope, characteristics of the audit, then responsibility of the management, responsibility of the auditor. The auditor responsibility to issue audit report. Therefore, our next point will be with respect to audit report. What does the point says? That the form and content of the audit report is to be mentioned and specified, and in case of any sort of circumstances that arise because of which expected form and content and the actual form and content might deviate, then you have to deviate, also mention that, and the FRF for the preparation of FS is acceptable. That is what our responsibility, that is what the management's responsibility is. Clear? Now come to just above this one important point, which I'll ask you again later on in SA 700 series. So at that time you should be able to answer this. Please pay attention. It's a very important minute point, not yet asked but can be asked, right? So limitation on scope prior to audit engagement acceptance. That means what? You have till now not accepted the audit, and before that only management has started telling you that okay, you can't access to our trade payables, you can't have access to our employees, you cannot talk to them, you cannot have access to our records, you or records or books. So before, prior to the acceptance of the audit engagement only, they have started putting limitation on the scope, limitation on the scope prior to the audit engagement. So I'm just gonna ask, do you think how is the reporting done in the audit report? Qualified opinion or unqualified opinion? And in the case of qualified opinion, or there is what? Adverse opinion. And then there is what? Disclaimer of opinion. Yes, anyone? Yes. Bolo bolo, when do we issue qualified opinion? When do we issue adverse opinion? When do we issue disclaimer of opinion? Huh?
Not able to obtain sufficient and appropriate audit evidence at that time, will be issuing a disclaimer of opinion.
When we have obtained sufficient appropriate audit evidence.
Not able to obtain sufficient and
Sufficient
appropriate.
appropriate audit evidence, either we have obtained, or sufficient appropriate audit evidence we have not been able to obtain, right? And then the misstatement, material misstatement, or you can say normal misstatements are material.
If there is material misstatement and misstatement is pervasive, then it is adverse opinion.
Right. So material and pervasive, and pervasive. So here quickly just let's see, if we are able to obtain sufficient appropriate audit evidence and the misstatement is material but not pervasive, then we will issue what?
Qualified opinion.
Qualified opinion, right? So it's not pervasive misstatement. That means what? It is not affecting all the financial statements as a whole. It's not affecting financial statements as a whole means what? It is not pervasively affecting cash flow statement, income statement, balance sheet, everything, every statement. Then again, sufficient appropriate audit evidence we have obtained, and we found that the misstatements that we have found are material as well as pervasive. So here
Adverse.
adverse. Now sufficient appropriate audit evidence we have not been able to obtain. Then in case the misstatement, we believe that whatever misstatement we are not able to get through might be material but not pervasive, then we'll do what? qualified. And lastly, in the case of material and pervasive, here if we are not able to obtain SI, then we'll issue a disclaimer of opinion. Now I'll just quickly ask you one question. Now before the acceptance of audit engagement, you already knew that there will be a limitation in the scope of audit. There will be a limitation in the scope of audit. Now suppose that after the acceptance of the audit engagement, you might before acceptance there was no such limitation, but after acceptance or at the time of issuing of the audit report or at the time of doing the audit, there is a limitation on the scope of audit engagement. Limitation. So which opinion do you think will be issued if because of such limitation it is gonna be misstatements are gonna be material and pervasive?
Disclaimer.
Disclaimer, right? Why? Because limitation is there na, so you are not able to obtain size because they've limited you. They are not granting you the access. They are not granting you to talk to employees, talk to debtors, talk to trade payables. No such restriction should have been there, but now they have been imposed a limitation, and that means what, you will not be able to obtain psi, and therefore in that case you will issue a disclaimer of opinion. Now do you know what is the reporting format of disclaimer of opinion versus what is the reporting format of qualified opinion versus what is the reporting format of adverse opinion? Where do you think we are not giving the opinion at all? We are not at all giving our opinion. We specifically mentioned that we are not expressing our opinion.
Disclaimer.
Disclaimer, right? So in qualified generally you will see what qualified opinion, we will say that we express our opinion and we find that the financial statements are true and fair except for the matters which is stated in the basis for disclaimer, basis for qualified opinion, except for the matter which is specified in the basis for qualified opinion, except for that all other matters or other items in the financial statement give true and fair view. That is what is our qualified opinion. That means what, we are expressing our opinion. We are expressing our opinion. In even in the case of adverse, even in the case of adverse, we say that due to misstatements which are so much material and pervasive. And why? Because the reason you can find it in the basis for adverse opinion, we are expressing our opinion as adverse. That is, financial statements are not material financial statements are material misstatements and not giving true and fair view. Financial statements are not giving true and fair view because of the matters that we have stated in the basis for adverse opinion. But in the case of disclaimer of opinion, you say what, we are not issuing our opinion, we are not expressing our opinion on the financial statements. We cannot express our opinion because of the unavailability of sufficient appropriate audit evidence. We are not even expressing our opinion. So don't you think if before acceptance we already knew that because of this limitation we will be issuing disclaimer of opinion, if because of the limitation that is being imposed before acceptance of the audit engagement we will be issuing disclaimer of opinion para, because we believe that because of this limitation the misstatements will be material and pervasive. That means what, we will be issuing disclaimer and not qualified. So even in qualified we are expressing our opinion at least, but in disclaimer we are not even expressing our opinion. So if you already knew this, then will you accept before acceptance of the audit engagement? You will not be able to express your opinion only.
No.
No, right? So in the case when you believe that because of this limitation you will be issuing disclaimer of opinion, not qualified disclaimer, then in that case you will not accept the audit engagement. Just read this. If management or TCWG imposes a limitation on the scope of the auditor's work in the terms of a proposed audit engagement, such that auditor believes that limitation will result in a auditor disclaiming opinion. That means what? Misstatements auditor believe is material misstatement will be material as well as pervasive. It will be material as well as pervasive. Then in that case, auditor shall not accept such a limited engagement as an audit engagement unless required by law or regulation. In other cases, they can accept because in that case, at least they will be issuing the audit report. They will be issuing their opinion, expressing their opinion, right? But in disclaimer opinion, you are not even going to express your opinion. Then what is the point in accepting the audit engagement? Clear? MCQ can come. Instead of disclaimer opinion, they will give you 4 options: qualified opinion, unqualified opinion, adverse opinion, disclaimer opinion. Clear? Yes or no?
Yes,
Nikita?
sir.
Yes, sir.
Now let's see recurring audits. So that is also very easy but important question. Again very important question. Recurring audits, that means what here? In the case, suppose you have already accepted the audit engagement, and now the next year also you are gonna accept the audit engagement. That means what? Here the audit is recurring audit. Second time it is coming on to you, so auditor can decide not to send a new audit engagement letter. So second time you will again have a question that whether again do we need to create a do we need to form a engagement letter and we need to have an agreement with the management or not, because earlier already we have an engagement letter and the audit is under the same lines that we did in the last year. So do you think we will be required to have a separate engagement letter every time each and every year audit? Yes or no?
So if there is no change, then I think don't required.
Right. So if there is no such change in the scope of the engagement or characteristics of the engagement, timing of the engagement, management's responsibility, auditor's responsibility, or change in the there is no such major change in the management, there is no such change in the operating environment of the entity, then similarly there is no such change in the business of the entity, or law or regulation that applied to the entity has not changed much. Similarly, ownership of the entity has not changed, shareholding, and the financial reporting framework has not changed. Suppose from in the banks, if you are aware about this, NBFCs have already been started preparing financial statements in accordance with Ind AS. However, banks, how do they prepare financial statement? In accordance with accounting standards only till now. So from next year onwards, RBI is pushing banks also to prepare financial statements in accordance with Ind AS. Then there is gonna be a change. There will be gonna change in the FRF only. So FRF will be changed, and that is a material change. In that case, we might be required to create a new engagement letter. Why? Because FRF change is not gonna impact only the financial statements reporting. It is also gonna impact your audit report. Because if you see, just let's take example of banks only. Banks report gross non-performing asset, GNPA. So in the case of GNPA, suppose if the banks are reporting 3 to 4% of GNPAs, then if index is applied, then they will have to report based on staging: stage 1 asset, stage 2 asset, stage 3 asset. If you have the knowledge of NBFCs, then you might be aware that staging wise categorization has to be done of the asset, and when index will be applied, then staging wise categorization will be done. And in that case, this GNP ratio will be calling it was stage 3 assets ratio. And this is generally seen in the trend wherever, in whatever countries, in Sri Lanka or in whichever countries you'll see where the staging provisions have been implemented for banks, the GNPA ratios or stage 3 assets ratio have almost doubled or 1.5 times at least. So in that case, because of the change in provision, change in reporting requirement, change in financial reporting framework, there is a change in the key figure, change GNP. It's very very important for banks. So in that case, a new separate engagement letter has to be agreed upon, and that is what they are saying, that if at all there is no change in all these points, then yes, okay, fine, you can continue with the same engagement letter. And but if at all there is a change in these points, then yes, you can think of again, in the case of recurring audit, prepare or draft a new engagement letter and get itself agreed with the management. So I think we have done the most points. You can see all the 8 points, you can read. If there is a change in the objective or scope of the audit, change in engagement, change in management, change in establishment, change in requirement of law and regulation, change in ownership, change in FRF, change in auditors reporting requirement. Change in reporting requirement here means what? Auditors reporting requirement. Let's just try to quickly grasp all these points. Repeat after me. This is our rap song. That is what? Engagement, management, establishment, requirement, ownership, FRF, reporting requirement. Ownership, FRF, reporting requirement. Engagement, management, establishment, requirement, ownership, FRF, reporting requirement. Ownership, FRF, reporting requirement. Clear? So these are rep. So I guess all the 8 points you will be able to retain. Engagement, there is a change in engagement. Management, there is a change in senior management. Establishment, there is a change in nature or size of the establishment. Requirement here is what? Law and regulation, legal and regulatory requirement. So engagement, management, establishment, requirement. Engagement, management, establishment, requirement. Ownership, FRF, reporting requirement. Ownership, FRF, reporting requirement. So ownership, change in ownership, FRF will be changed in FRF, and again reporting requirement will be changed in any other sort of reporting requirement, auditor's reporting requirement. So again, engagement, management, establishment requirement, ownership FRF, reporting requirement, ownership FRF, reporting requirement. Clear? Yes, now come to acceptance of a change in the terms of audit engagement. So now that when you have accepted the audit engagement, now they want you to change the terms of audit engagement. That whatever terms you agreed upon, auditee wants the auditor to change certain terms of the audit engagement. So do you think the change in terms, this change in terms will be in the favor of management or will be in the favor of auditor? What do you think? Generally,
Management.
generally in the favor of management, right? Exceptionally, it could be in favor of auditor also, but generally you will find that it is in the favor of management. They want to change the terms in accordance with their favor. So that is what we also have to assess now, that we cannot agree to the changes. Whatever change they want to propose in the terms of audit engagement, we cannot simply agree on the changes unless there is a reasonable justification for doing this change. So we'll ask for the justification why, if at all there is a change. They'll say that the daters are not responding, so we are not able to give you daters confirmation. So there is this change in the terms of audit engagement, that you have to obtain SI on the daters without obtaining confirmation from the dater. There will be no confirmation from the daters available. Then we have to obtain a reasonable justification for this change in terms. There shall not be, we should not agree to any such change in the terms of audit engagement unless there is a reasonable justification for doing so. Then secondly, it says what? Before completing the audit engagement, you have to change the audit engagement to an engagement that conveys a lower level of assurance. That means what? The management, whatever change they are proposing, as I said, those changes will generally be in the favor of management, and whatever change they propose, that is actually conveying a lower level of assurance. So in that case, auditor will determine whether there is a reasonable justification for this change which provides lower level of assurance. That means what? Our assurance level is now being decreased. Whatever assurance level that earlier we had, because of this change we will not be having the same level of assurance. Therefore again we will have to find a reasonable justification, and if at all there is a reasonable justification from the management, then we'll agree. Okay, don't worry, then we'll agree. However, we'll then again draft the new terms of audit engagement and agree with the same through a written format and get it signed from the management and the auditor. So we'll draft a new engagement letter and other any other sort of suitable agreement letter, and then we will get it signed or get it agreed with the management. We'll draft the new terms of the audit engagement if there is a reasonable justification. However, if there isn't a reasonable justification, then auditor will not be able to agree on the changes, right? Auditor will not be agree upon the changes of the terms of the new audit engagement, or the audit engagement terms changes will not be accepted by the auditor and also should not be accepted. And therefore in that case, if the management is insisting the auditor that you cannot then continue with the same engagement terms, that means what? Management is telling that with the same engagement terms you cannot do the audit. We are not permitting you to do the audit with the same engagement terms, and we are also not willing to change the agreement terms. We are also not willing to change the agreement terms. Then there is no consensus, right? There is no consensus, and in that case you can withdraw from the engagement. Straight away you can withdraw from the engagement under applicable law or regulation. And also determine, whenever you withdraw, remember, whenever you withdraw, you have to determine whether there is any reporting obligation imposed on you by law or regulation or by professional requirement. For example, I gave you section 140 subsection 2, where the responsibility for you after withdrawal or after resignation is that you have to report it to ROC, you have to report it to company management, and also in the case of government company you have to also report it to C and AG. So I think 4 points are very much clear. Acceptance, first you will say that you should not agree. You should not agree where there is no reasonable justification. However, if there is a change in the terms of audit engagement and that change is providing lower level of assurance, then definitely you need to obtain what? Reasonable justification. If at all there is reasonable justification, that means what? You are willing to agree with the change in the terms of audit engagement, then auditor and management can agree upon the same and record these new terms in a separate written agreement, separate engagement letter. However, if auditor cannot agree with the change in terms of audit engagement, and management is not permitting the auditor to do the audit, perform the audit in accordance with the same terms, then in that case there is no consensus, there is no harmony, and for that matter we will withdraw from the engagement and will determine whether there is any other obligation for us after withdrawal.
Sir,
Yeah.
sir, how an auditor go with the lower level of assurance, even there is any reasonable justification for such?
For reasonable justification, if suppose just like for example, suppose data's confirmation, if they are providing that data's confirmation will be providing lower level of assurance, then you will say what, okay fine, the justification is there for data's confirmation, but then I'll perform alternative audit procedures, other alternative audit procedure that I can perform, and to obtain any sort of other audit evidence, other alternative audit evidence or alternative audit procedure that I may perform, because this procedure I cannot perform, then definitely there will be a bit lower level of assurance, but not as such that I cannot perform the audit, right? So you can accept that justification in case management is providing that data are not available or data have run or whatever be the reason. If at all there is a reasonable justification, then you cannot simply just leave the audit, right? So that is what they want to say, that yes, you can accept the change in the terms of audit engagement if there is a reasonable justification, but then you will perform your other alternative audit procedure. And if at all you are not able to perform the alternative audit procedures or alternative audit evidences are also not available, then in that case you can issue in any way a qualified opinion. Clear?
Yes.
So just in the point 3, third point, that it said that you will record the new terms of audit engagement. So now that the new terms of audit engagement has been recorded, so in order to not to get confused, in order for us to not to get confused, the audit report on the related service would not include reference to the original audit engagement. That means what, whatever be the original terms of audit engagement that was earlier there, you should not give reference to those original audit engagement, and also any such of procedures that you have already performed in the original audit engagement terms, you have already performed in the original audit engagement terms. You will be reporting only and only what new engagement terms and the procedures that you have performed in the new engagement terms. Clear? Yes. Lastly, last point for this standard, reasons for entity request for changes in terms of engagement. So as discussed just above, that there could be changes in the terms of audit engagement, right? There could be changes in the terms of audit engagement. So what all could be the reasons, right? What all could be the reasons for there, if at all there is a change in terms of audit engagement? Suppose there is a change in circumstances affecting the need for the service. Now we do not need those service. So we'll tell what, okay, remove expenditure and income audit from this engagement. We no more require those service. Or suppose we will get those audited from another auditor, we are appointing joint auditor or whatever be the reason, there is no such requirement now. Change in circumstances affecting the need for the service. Similarly, misunderstanding as to the nature of an audit. As originally accepted, we assume that it is also going to be a tax audit along with statutory audit, but now we knew that no, only statutory audit has to be performed, tax auditor will be different. Tax auditor, we don't have to perform the tax audit. So there was a misunderstanding as to the nature of the audit that is going to be originally requested by the management. And could be restriction on the scope of the audit engagement. Scope wise there is restriction, just like I told you, scope restriction, limitation on getting access to data. It could be imposed by the management or could be caused by other circumstances also. Could be for any case. You have to assess whether there is a reasonable justification or not. And auditor considers the justification given for the request, particularly the implications that will have on the audit opinion. And if the auditor concludes that there is a reasonable justification, the audit work performed to the date of change may be relevant to the changed engagement. That means what? Whatever work we have performed till now, before the change in terms of audit engagement acceptance, whatever work we have performed till now, that this audit work performed to the date of change may be relevant, could be relevant to the changed engagement. For the new engagement, that is new terms of audit engagement, also this original work that you have performed till now could be relevant, right? Anyways, there could be a circumstances where there is not much change in few points, and those points could be still relevant under the new set of terms. However, work required to be performed now, the future work that you are going to perform, what do you think you are going to perform with the original engagement terms or the new engagement terms? Obviously new engagement terms, right? So that is what they say, that the work required to be performed, the new work to be performed, and the report that needs to be issued should be those appropriate to the revised engagement, new engagement. So that is what our SA 210 is. Everyone?
Sir, one
Yeah.
question. Sir, if the prior work is accepted, like from the prior engagement, so the reference will be there, na, from the prior engagement.
No,
Means there
under the
was a
new set of terms of audit engagement that would have been relevant only. So even when you are doing that, those, or say audit procedure, the same audit procedure, few of the audit procedures or few of the points would be same under new terms of audit engagement. So new engagement terms only you will mention,
okay. Means
but
I
that
can't
won't
copy.
be
I can,
the
yeah.
redundancy. There won't be any redundancy in the work that you have already performed. Getting it?
Okay.
जो काम
Okay.
ऑलरेडी कर दिया तुमने बेस्ड ऑन द न्यू टर्म्स ऑफ ऑडिट एंगेजमेंट और ओल्ड टर्म्स ऑफ ऑडिट एंगेजमेंट, दोनों में ही सेम है, तो फिर वो काम वेस्ट थोड़ी ना हो जाएगा. दैट इज व्हाट दे आर सेइंग, मे बी रेलेवेंट टिल नाउ.
But in the new term of engagement letter, जो letter रहता है, तो in there we have to mention that we can't only give the reference that it is taken from old engagement. We can't do that, but we have to mention that point that this is also the term.
In the new terms of audit engagement, whatever be the changes in the terms, so you will be performing the audit procedure based on those changed terms, and you don't have to mention the old engagement letter in order for you to not get confused. So what you are saying, कि we have to specify each and every point, there is what all points were covered in original engagement terms and new engagement terms.
यस सर. सो वहाँ से ले सकते हैं कि हमारा कोई काम किया है, कोई एक एंगेजमेंट है,
न्यू
उसका कोई.
एंगेजमेंट में भी न्यू एंगेजमेंट में भी पूरे ही पॉइंट्स रहेंगे, जस्ट दैट देयर विल बी सर्टेन चेंजेस इन फ्यू पॉइंट्स.
ओके.
या there is also a draft given in SA 210 appendix. If you want, you can go through the agreement letter. How is it? SA 210 appendix. So now we are done with SA 210. I'll strictly start with you all. Start giving me the answers. Yes, preconditions for an audit, Krupali. Preconditions for an audit.
Sorry,
Okay.
I was answering. Yeah. Management responsibility to prepare financial statements, to provide access to relevant informations, unrestricted access, and acceptable financial reporting frameworks, understanding of the responsibilities. No, this is not there.
Yeah. Only that much. That financial statement FRF that is used for preparation of FS is acceptable. And one point you missed was internal controls for the preparation of the financial statement has been is the responsibility of the management, right? So they are going to accept that responsibility, that the internal controls which is implemented in the entity will help preparation of the financial statements in accordance with applicable FRF with no material misstatements. And
Yes.
also management will provide with all the information, additional information, unrestricted access. All information, additional information, unrestricted access.
Yes.
Yes, Nikita, tell me, agreement with the in the engagement letter, what all points you need to cover in your agreement letter, engagement letter.
Objective and scope of the engagement, responsibility of auditor, responsibility of management, uh, form and content, and, uh, the, 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 form and content and applicable law applicable law and regulation. No, if it's as per the applicable law and regulation, then we don't need to describe the form and content. And applicable financial reporting framework.
Right. So you can just try to recollect those last 2 points from the responsibility of the management. What is the responsibility of the management? FS preparation in accordance with applicable FRF, right? So FRF could be derived from that last point, responsibility of the management, and similarly responsibility of the auditor is to issue audit report. And therefore what will say, form and content of the audit report, if at all there is any deviation or any sort of circumstances because of which form and content of the audit report will be different from the expected form and content. So everything has to be there in the audit report. And lastly, if the law or regulation already provides for the terms of the audit engagement or few points of the audit engagement, then you may not specify clearly again in your engagement letter, but however you need to obtain acknowledgement from the management that they are aware about this law or regulation. Clear? Yes. Then Sony, quickly tell me, recurring audits, do you think under what circumstances will warrant you to draft a new engagement letter in the case of recurring audits?
So, new engagement letter in case of change in ownership,
Hmm.
change in senior management, and the nature size change, and FRF change, like that.
So what was our rap? Yeah, Kapil,
Risk.
engagement, management, establishment, requirement.
Okay.
Engagement, it's easy, right? You can just wrap along engagement, management, establishment, requirement, ownership, FRF, reporting requirement. Ownership, FRF, reporting requirement. So change in ownership, change in FRF, change in reporting requirement, change in management, change in engagement, change in establishment, change in requirement. Requirement, what requirement? Legal and regulatory requirements. Okay? Try to get along with the class itself. If I am trying to emphasize on certain point that you can learn this way, you can also try at least to learn.
Yes, sir.
Then what? Acceptance of a change in the terms of audit engagement. Yes, then Lakshmi, whether we should accept, if at all there is a change in terms of audit engagement, how should the auditor then proceed in accordance with SA 210? If there is a change proposed by the management in the terms of audit engagement. Yes.
So you asking me?
Yeah.
Sorry, sir. What is the question again?
Acceptance of change in terms of audit engagement.
Acceptance of change in terms of audit engagement. Uh, the auditor should check whether it is reasonable or not. On reasonable terms, it is being if they are revising the engagement.
Hmm. Then then lower level of assurance. Yes. If the change in terms of revised engagement, if this change provides auditor with lower level of assurance, then
He should not accept the audit or should withdraw the engagement.
no such point of withdrawal here. Should not accept the audit engagement. That is not also the case. Then you have to provide reasonable justification, na? There should be reasonable justification for the change. If you
Hmm.
find that justification is reasonable, then you will accept the change terms of audit engagement and you will draft a new engagement letter and get it signed and approved, agreed with the management. And if you are not accepting the change in terms of audit engagement, and management is also not permitting you to continue with the existing terms, then you will think,
Mhm.
of withdrawal.
Okay.
Okay, reasonable justification you have to obtain first. If at all you find that the justification is reasonable, then you will accept, draft a new engagement letter
Hmm.
and continue. If you find that okay, I cannot accept the change terms because there is no as such reasonable justification, then you will
Hmm.
tell this to the management. If the management still persists you to continue with the new terms and is not allowing you, permitting you to continue with the existing terms, then you will do what? In the case of, then this is a case of no consensus, and in that case you will withdraw and
Consensus.
accordingly see your obligations to report to which authorities, or to report to regulatory authorities, management, TCWG, any other
Hmm.
your professional or legal and regulatory requirements.
140 subsection 2.
Yeah, and
Hmm.
even, yeah, 140 subsection 2.
Cool.
And lastly, reason for entity request for the change in terms. What all could be the reasons? What all could be the reasons, Arnab?
Sir, if there is some like some service that doesn't needs anymore, so in that case, and
Yeah,
some there is some prior misunderstanding with the management, and auditor and management thought at the time of engagement it was there, but after that there is some misunderstanding, and there
correct.
is some restriction of at the time of precondition auditor could not find some restriction, but during the audit if he find or she find some restriction, then at the time of restriction on the scope did and imposed by management, or whether it is already there in that time, that will be request for change from the entity.
Fine. So we are done with essay 210 completely. No point left, not even from the bare standard. Okay, each and every point is completed, even from the bare standard, except for the reporting, except for the format of that engagement letter. So that is there in the appendix, but that won't be even tested anytime. Now come to essay 220, quality control for an audit of FS. Quality control for an audit of financial statements. Quality control. Now, yesterday also I told you the difference between SA 220 SQC1, right? So SA 220, I told you what it is with respect to the audit engagement, specific audit engagement. So quality control for an audit of financial statement. So I asked you yesterday whether you will straight away accept if at all a new client comes and tells you that okay, accept my audit and I'll provide you the fees of rupees 10 lakh. So what all points do you need to consider before acceptance and continuance of the client relationship? Before acceptance and the continuance of client relationship. Yes, quickly. This we have discussed already yesterday. Bolo,
Sir, uh, are you asking me? Sorry.
anyone. Yeah, you can tell also.
Sir, attitude of the client's principal owner, यही
Integrity
वाली
of
part
the
थी क्या?
client's principal, ownership, owners and their key managerial personnel's integrity, right? Yes. More points. Yesterday we saw two different
Sir,
questions.
Nature
sir,
of the client
engagement,
business,
Yeah, Sony.
engagement team competence.
Competency of the engagement team, right? Staff, competency, capability. Yes,
nature of the
Rupali.
client business.
Nature of the client's business. That was one of the point that you can assess to identify the integrity of the client.
Okay, sir.
Yes,
Past
Sir,
past audit engagement,
past audit engagement.
previous past.
So you are trying to say that previous communication with the previous auditor, or what?
Yes, that can be, and also with the if there any engagement with the same firm.
Engage, if the engagement was within us, with us only, that is
Yes,
continuance of the engagement, original engagement. So in that case, you are saying that we can see the past audit.
yes,
Yes, Puja, ethical requirement was the third chart. If you remember the chart uh, last class, there was integrity, then competency, and then the ethical requirement. And then one more I told you was independence. Do you remember? We will see what independence requirement. Are we independent of the client or not? Any of our engagement team, engagement partners, all everyone should be independent. So these 4 points definitely you will see. Are we clear? So there are two ways in which this can be framed as a question. they say that before acceptance or continuance of the audit engagement, you should at least see these 4 points. Why do you think they say these 4 points? Because these are certain examples of matters that may cause the audit firm to withdraw from the engagement. These are the examples, 4 examples, where they might cause the firm to withdraw from the engagement. And in that case, if you are already aware that we might need to withdraw from the engagement later on, then you should consider these 4 points before acceptance only, before continuing only. You should try to see these 4 points before acceptance and continuance. So they can ask you either this way, that what all points should be considered by you before acceptance or continuance of client relationship or engagement, or they can ask you examples of matter that may cause firm to withdraw from the engagement, examples of matters or information that may cause the firm to withdraw from the engagement. Whatever they ask, the answer will be these 4 points. Just go through this question. This has come twice or thrice in exam. ठीक है क्या? Yes, yes, yes. Now assignment of the engagement team. So everything has to be considered professional requirement, legal and regulatory requirement, and should enable an auditor's report that is appropriate in the circumstances. So that is what they are saying. Engagement partners shall satisfy himself that engagement team and any auditors expert who are not part of the engagement team collectively have the appropriate competence and capability. So on the competence and capability, they are saying only on this point, competency. Now independence, important. So engagement partner will have to conclude that engagement team as a whole is independent. And even yesterday we saw what, not just the engagement team but any person who is involved in the audit engagement, could be contractual employees also, or any person who is involved in the audit engagement as an external third party, example experts, do you remember? Then those all persons should also be independent. Those all should also be independent. So engagement partner have to conclude on compliance with the independence requirement that apply to the audit engagement, and therefore while complying with the independence requirement, engagement partner shall obtain relevant information from the firm, that who are the engagement team, who are all the engagement team with comprising the engagement team, and who are the directors, owners, key managerial person of the entity, or subsidiaries of the entity, associate of the entity. Are they in any way related? Then we'll ask the declaration from within the engagement team, if at all it is anything, something which is hampering the independence requirement. Any not just relationship, could be anything which could hamper the independence requirement or breach the independence requirement. So first we will ask what relevant information from the firm and network firms to identify, evaluate the circumstances, relationship that can create threats to independence. Then secondly, we'll evaluate whatever information that we have obtained. What all information we obtain, from whom all, from the firm and from the network firms, right? From firms, from network firms, to identify this threat to independence. Then whatever information we obtain, we'll evaluate those information to identify any sort of breaches in the independence requirement, if at all there is any independence breaches. Then thirdly would be to take appropriate action to eliminate the threat. Once you are aware about the independence breach, that means what, there is a threat to independence requirement, there is a breach in independence requirement. Now once you are aware about this, then you need to what, reduce the threat to independence, reduce the threat, or reduce or eliminate the threat. So then you will take the action to eliminate the threat or to reduce the threat to an acceptable low level. Do you remember safeguards, fundamental code of ethics in the professional ethics? So either you can eliminate the threat, right, or either you can reduce the threat to an acceptable low level. So that is what they are also saying, eliminate such threats or reduce them to an acceptable low level by applying the safeguards. To withdraw from the engagement, you can also withdraw from the engagement if at all you find that okay, it's not, we are not able to reduce the threat, we are not able to reduce it to an acceptable low level. Then you might also need to get yourself withdraw the engagement partner, then promptly report to the firm any inability to resolve the matter for appropriate action. So independence, the question was, the question, okay, I'll tell you later, but this is important. You will have to write in the question when it comes against independence. So it says what, engagement partner shall have to obtain relevant information from firms and with network firms. Then after obtaining information, what will do? You will evaluate whether there is any threat to independence, whether there is any independence breach, and then after evaluation you will try to take certain appropriate action in order to either eliminate or to reduce, to an acceptable low level. Clear? Bolo bolo bolo. So this point we also saw yesterday only, SQC1. Leadership. So who used to be generally a leader in the case of SQC1? Do you remember SQC1 who used to be generally leader?
Engagement partner.
Uh-huh.
Engagement partner.
That is in SA220, na? I'm asking in SQC1.
CEO, MD, or
CEO
equivalent of
or
the
MD
firm.
or equivalent, right? Yes, Kapil. So as a part of this responsibility, engagement partner should emphasize the following to the engagement team. So engagement partner की responsibility, are you getting this? This is a part of the responsibility of the engagement partner, so that engagement team comply with all the professional standard legal requirements, that they comply with the QCPs, quality control policies, quality control standards. Then they issue any sort of queries, report, opinion, whatever opinion they have, they issue without any fear, so ability to raise concern without fear and issue the appropriate audit report. And lastly, quality is essential, important, very much important and indispensable in engagement performance. So these are leadership responsibility points that the engagement partner in SA220 has to oversee or go through. Now comes the engagement performance.
Sir, in SQC1, MD CEO of the audit firm, right?
Yeah,
Okay.
MDCO will be of the firm only. Engagement partner would be audit specific, engagement specific. Will be different for each engagement, right? Now the engagement performance, direction, supervision and performance. So engagement partner again has to show responsibility, has to take responsibility. So in overall SA220 you will find that in all the places it is the responsibility of engagement partner. That is why yesterday I told you the responsibility in the case of SA220 is what? Engagement partner. However, responsibility in the case of SQC1 is of whom? MD or equivalent, or CEO or equivalent. So again, engagement partners has to ensure DRS, direction review supervision of the engagement is in compliance with the standards and regulatory requirement. So DRS should be appropriate as per professional requirement, as per legal and regulatory requirement. Secondly, audit report being appropriate in the circumstances. So under the circumstances, audit report is appropriate. That means what? If you should have issued qualified opinion, then you should have issued qualified only and not unqualified, and not vice versa. If you should have issued unqualified, then you are issuing qualified. So report is being appropriate in the circumstances. You have to direct, you have to review, you have to supervise your engagement team. So engagement partner has all these responsibility, engagement performance wide. So in the case of review wala question, the engagement partner has to take responsibility for review being performed in accordance with the engagement forms policies and procedure. And from where do you think this forms review policies and procedure will come from? Where do you think this firm's review policies and procedure will come from? SQC1, firm wide quality control policies procedure will come from where? SQC1, yes or no?
Yes.
So engagement partner has to take responsibility with the firm's called review policies and procedure. And important, on or before the date of auditor's report, engagement partner shall be satisfied that SAI has been obtained to support the conclusions. So definitely before you are putting the date of audit report, that means what? You are finalizing the audit report. You need to ensure that you have obtained all SAI. All SAI. SAI means SAAE SAI. Now, whenever the engagement partner taking over an audit, he has to, I just now told you what, direct review supervise, DRS, direct review supervise, right? So in the case of review, he has to also perform certain review procedures. Important, very very important question, essay 220. And this all review procedure you have already seen these points. Quickly go through and tell me where did you see these points. Just go through the same. That says what? Wherever an engagement partner is doing the audit, he will have to perform the review procedure. He'll have to perform the review on the below points. Review on the below points.
So audio problem.
Yes, Nupur. Which
Yes,
answer?
sir.
Huh?
Review of the work performed by less experienced person by the experienced partner.
Right. So review to be performed in the case of review was performed by less experienced team member, and then in that case more experienced team member will have to review, right? So those points, are you getting the same points? And there also I told you that is very very important answer, and here also it is very very important. The question generally comes, the question which generally comes, you will see just beside this, that the signing partner died just before signing the audit report, and in that case another partner therefore signed the audit report without reviewing the work performed. So he did not review any sort of work that was performed by the original partner who died, and straight away signed the audit report considering that okay, that partner was very much proficient. So in this case, you'll have to answer what key points, that is apply you this all these review procedure points, pura apply review procedure, plus carefully you have to then conclude that carefully direct, supervise and review the work delegated, and you are entitled to rely on the work performed by the your other partner. However, you need to do the adequate review procedures that is mentioned here. At least you have to review that the consultations that you have taken have been documented or not. So documents, you will see the work that you performed and the conclusions that you reach. The work that you performed and the conclusions that you reach are in consensus or not, and the conclusion that you reach are documented or not. All these points yesterday what we saw will be coming here also. Clear? Yes or no? Now comes the consultation, which I give you as homework, but an important point not yet asked. Homework. Now comes engagement quality control review, EQCR. So do you remember EQCRR, engagement quality control reviewer? Engagement quality control reviewer, EQCRR. So it says what? For audit of financial statement of listed entity and those other audit engagement for which the engagement quality control review is required. That means what? EQCR wherever applicable, then in that case engagement partner will determine that EQCRR is appointed or not. For my checking of my audit which I am doing, whether EQCRR has been appointed or not for the purpose of checking my audit. Similarly, you will have to discuss the significant matter with the EQCRR. बैठो बढ़िया उसके साथ and discuss, go on a coffee with him, discuss the matter, significant matter with the EQCRR. And lastly, very very important, not to date the audit report until the completion of the EQCRR. That means what? Suppose EQCRR completed quality review on 30th August. So your audit report date should be more than equal to, that means what, should be greater than equal to 30th August. Should not be prior to this, your audit report date. Clear everyone? Yes or no? Then
Yes,
the
sir.
Yes.
engagement quality control reviewer shall evaluate the following. What all points you will evaluate? What all points you will evaluate? Important. So this is our So this is our EQCRR, right? And this is our engagement partner. So now the EQCRR has come and discussed with the engagement partner, and he'll evaluate the following. What all point he'll evaluate? He will simply say to the engagement partner that look, I'll hang you, फांसी लगाना, that we saw, फांसी लगाना, hang you. So फांसी लगाना आया है, and discussion, फांसी here means what? F for financial statement review, A for audit report review, S for again A again next A FAASI na. So again A audit report review, audit documentation review, C for conclusion that you have reached and the considerations that you have considered while arriving at that conclusions. So all these points, what was the question? The question was EQCRR will evaluate what points? EQCRR will come, will ask for the documentation. Each and every documentation he will check. He will go through audit report. He'll go through audit documentation. He'll go through F for financials. He'll go through the financials. He'll go through audit report. He'll go to documentation. Then similarly, conclusions that you have reached. Conclusions reached in the formulating auditor's report. Particularly in the case of listed entity, you have to see that engagement team's evaluation of the firm's independence is also looked by EQCRR. Now just come to the question just beside this and remember this line, point A, and come to this question. Yes, Pooja. What do you think? Whose responsibility is it for evaluation of independence? Is it the responsibility of engagement partner or is it the responsibility of EQCRR? Tell me. Engagement partner's responsibility is there. So engagement partner is correct, you are saying? In his defense, are you saying that engagement partner is correct? It is not the responsibility of EQCRR to evaluate independence, and therefore EQCRR should not get into this all these matters. Should not ask to me according to me to documents of independence or for any documents for the evaluation of independence. What do you think? If you are saying it is the responsibility of engagement partner, then he is correct only, right? Yes or no, Pooja? I recall this song when I asked you all. है सौ जन्म देखता है तेरा रास्ता. बोलो जल्दी बोलो. 100 जन्म लगाते हो टू आंसर.
So EQCRR is required to assess the independence of the engagement partner.
So EQCRR is responsible, right? Here only he said that in the case of listed entity, and this was a listed entity only. It's not given, but it's in the case of listed entity, you will have to see that the engagement quality control reviewer will also evaluate the independence of the engagement team. Will also have to evaluate the independence of the engagement team. We'll have to see whether the consultations were appropriately taken from the external third party experts or any sort of consultations that should have been taken, and whether the documentation has been done for the workings and conclusions that you have arrived at. So these points also have to be seen by the EQCRR. So that is what you will say here. Independence write up, entire independence point you will see. Engagement partner independence requirement you will see, right? Do you remember independence write up, entire write up? Yes, what was it? Sagar. Independence, this one. Firstly, we'll obtain all what? Relevant information. Then we'll evaluate the relevant information whether it leads to any breach of independence requirement. And lastly, we'll take appropriate action either to eliminate or
or
to
reduce,
reduce.
or if there's any or required, then we can withdraw also.
So almost all the questions we have covered of essay 220, just simultaneously do along with this SQC1 also, right? So time for a break, quick break. Let's meet at 10.
Okay, sir.
ठीक है?
Sir, how long we are going to sit today?
What do you want? Tell me. Do you want a break in between in the afternoon? We can sit for evening again, or do you want to continue this
No,
until
sir.
evening?
Please complete the classes.
No, sir. Continue the class
Yeah. No,
after
no.
the
Small,
break.
with small breaks.
We can take the frequent breaks.
Fine then. Now let's start with what? Audit documentation. SA 230 come to SA 230 audit documentation. So what do you mean by audit documentation? Yes, anyone quickly?
Working papers of auditor.
Working papers of the auditor, correct. So it will include all sort of audit procedures that you are performing. So it will record all audit procedures that you perform. You will have a record of those procedures that you are performing. You will have the record of all the audit evidence that you have obtained, right? So all the record of the audit procedures, audit evidences, and the conclusions that you draw, the conclusions are also being documented. So all these are what my audit documentations. So basic requirement is, it's just a kind of basic requirement out of total standard SA 230, which I just here summarized. The documentation should be sufficiently complete, dated, and signed. That means what, in each and every documentation you will find that it is being dated, signed, and it should be complete. All significant matters involving judgment should be documented. That means what, wherever you have taken a certain judgment assumption and any other party is seeing the same file, same working, same Excel file, might not draw the same conclusion, same judgment. In that case, you should draw or conclude and properly document your judgment. Document the judgment that you are taking. That is what he's saying, that all significant matters involving the judgment should be documented. Then, as per ICA, documentation is the property of the auditor that we already know that he can, at his discretion, make availables of the or extracts of the working papers available to its client only, its client, right? And he should maintain it at least how many years? Yesterday only we saw
7 years.
7 years.
from the date of
Audit report.
Audit
Signed
report.
audit report and not from the date of financial statement. Okay.
financial statements.
Now, the purpose of audit documentation, if you remember this, you might have learned in IPCC. In fact, all the points already might have done in IPCC, but this was particularly important at IPCC level. What is the purpose of audit documentation? So, audit documentation serves number of additional purposes, which includes to plan and perform the audit. Right? Once you have the audit plan, audit plan. Do you think it's a audit documentation only? Right? Whatever we prepare, planner, audit plan. What we say, audit plan, that is also a sort of documentation, because that will also help you to assess the work that you have performed in later part of the year or later part of the audit. Similarly, it will help you to make the persons responsible, because if you see audit documentation, the work supposed to be performed here, revenue, then who is going to perform will be here, then due date will be here, by what date it has to be completed, actual completion date, it will be there, and his sign signature, right? Signature will be there. So Yash is being responsible here now for revenue that he has audited within due date, actual completion date, whatever is done. So it's helps us to plan and perform the audit, and also to supervise, direct review, supervise the audit. It helps engagement partner to do the DRS, and at the same time it also helps the engagement partner to plan the audit, to perform the audit, then also makes accountable for its work. So in and all, if you could just imagine the, what you can imagine is audit plan. If you can just imagine audit planning, audit plan, so the planner is something sort of this. So here only you can see that the accountability is getting reflected from the point that you will sign in just in front of the work that is been allotted to you. So if you are signing, that means what, you are accountable now, you will be accountable, right? Similarly, engagement partner can direct review, supervise the engagement team, and engagement partner can plan. Engagement partner can plan the audit, yes or no? So 3 points you can just quickly go through the audit plan. Just imagine the audit plan, and you can just try to recollect the same. Audit planning and performing the audit, it helps us to do that. Similarly, it helps us to make the staff accountable, and also it helps engagement partner to do the DRS, direct review supervise. Then last 3 points are easy. It will also help you to do future audits, help in the future audits. So whatever audit documentation, you might be aware about two sort of working papers. Do you remember? Two types of working file, audit working file, audit file, current and permanent. Now do you remember what all documents we consider it as current audit file? Yes, current audit file, permanent audit file.
So which are required for the audit of the current financial year.
So whatever relevant for the current financial year, generally which are changing financial year to financial year, which generally changes, will be covered in the current financial year. However, there could be certain documents, example lease paper, right? Lease papers or property papers, shareholding papers, with regard to those documents which are generally not changed, which are not changed but remain as it is, that will be covered in what? Permanent audit file. So that is what they are saying. These files will help us in future audits, particularly permanent audit file, right? Particularly permanent audit file will help us a lot in our future audits also. That is the purpose of audit documentation. And they will also help external quality control reviewer and other inspectors, outside inspectors. So whenever they come, what do you think? Will they be performing the same procedure again by performing the audit performance again? No, they will simply go and check the documentation whether the audit was performed correctly or not. They are not going to perform the same audit again. They will just go through and check the documentation. So audit documentation also helps, also serves the purpose of EQCRR, also serves the purpose of any outside external inspection that needs to be carried on. For example, ROC inspector might come, income tax may come sometime. So documentation might help us for them to, if at all they want to review. Suppose EQCRR, similarly there are other inspectors who can come in the auditor's firm. So inspectors review, EQCRR review, and then what was the third point? Last third point, future audits. It is helpful for future audits. And the first 3 points is with respect to what? Audit planning. So it helps to plan and perform the audit. It helps engagement partner to do the DRS, and also it helps the engagement team to be responsible, right? To be held accountable. Purpose of audit documentation. Are we clear? Try to just go through again and again and again, just with the class, try to retain most of the points. In the later part of the revision, which you'll do after the class or tomorrow, you should be able to at least recollect 4 out of 6 points, if not all. So that should be the dedication that we are devoting in the class itself. Be it might take a bit more time, but let's see. Okay. Now comes advantages of audit documentation. So what's the difference between here the advantages of audit documentation and here the additional purposes that it will serve? So you can also see these all also the as an advantages, right? You can get confused later on if asked advantages, then you can quote this answer. Yes or no? So advantages, it is with respect to the same point, same lines, but just a point or two different. So it will guide the audit staff. It will make the audit staff responsible for their work. Same point, same point. Acts as a defense. Yes, this is important. If you are doing the audit, then no one can pinpoint on your auditing practice, auditing procedures, right? You can straight away see that okay, this or I have documented, and you can see this that I have performed this audit procedure in accordance with SS 505, 500, whatever be it, but I have performed by audit procedure in accordance with standards on auditing. You can see the documentation. Important for future planning. Definitely, as against future audits, it will help us to do the future audits. Similarly, it will also help us to plan for the future, how the audit will be actually carried out in next 20 days, who is going to do which all works, like same what we saw in audit plan. And contain basis for forming an opinion. So how are you forming your opinion? Based on what documentation, what conclusions, what consultations? Everything is documented, right? All the conclusions are documented, consultations are documented, and all the evidences that you obtain are documented, and therefore on the basis of these evidences, consultation, conclusion, you are forming an opinion. So that also helps us to determine an opinion and helps the senior to review the work done by the assistant. Definitely, whenever you are doing the work, then it has to be reviewed by the senior. So it will help the seniors also if you do the documentation properly. So documentation advantages are also there. Just go through these two in like kind of I can say in a quick manner, because those are more or less related to IPCC level. But still, I don't know. They can ask you anytime in final as well. Now comes factors affecting form, content, and extent of audit documentation. What do you understand by this, Suneshwaran? Factors affecting form, content, and extent of audit documentation.
uh, how many documents we need to collect from the entity, and how procedures to be performed. Uh, the planning, initial planning documents, all are recorded.
Initial planning.
I, what are the documents we to review? Like that, everything has to be
Okay, can you please say again? What all documents?
that need to be reviewed.
Just read the line once again. For factors affecting form of audit documentation, content of audit documentation, and the extent of audit documentation. What factors will affect the form of audit documentation, content of audit documentation, and extent of audit documentation? Are you getting the question? That
Nature of audit.
the in depth of the documentation that you need to carry out, the number of documentation, the conclusions that you need to document, or the level of documentation, the form of documentation, content wise, should it be more, should it be less? What all factors will determine, drive these factors? What all factors will drive these points? Whether you should document in detail, whether you should document all or few points. So generally, which factors you can see, you can also assume, yeah, any point, any one point at least. Size of the business, right? So if the business size is huge, then don't you think the audit documentation will also have to be due in depth? What form of audit report should be given, and also how much documentation we should do? If we find any significant risk, we need to document more. If we do not, then document less, right? Correct only, Avija? So that is what they are also trying to emphasize, how much documentation you are required to do based on the form of based on the size of the business. Then nature of the audit evidence that you obtain. What is the nature of that audit evidence? Is it oral, is it written? So if it's oral, then you need to document it more aggressively. If it's already written documentation, then okay, fine, it's already documented. So size and complexity of the entity. If suppose the entity is complex, what do you think, the documentation will increase or decrease?
Increase.
Increase.
Increase, right? The nature of audit procedures that you have performed. So the nature of procedures that you perform is based on those lines that, suppose you are performing audit procedure with respect to risk assessment. So there you will see what the business inherent risk, what all inherent risks are there, what are controls are being implemented by the entity, are they adequate enough to mitigate the risk? So control risk also you'll identify. So all this risk, once you identify, you'll also have to adequate. So that nature of the procedure that you perform, that also depends, will also factor in the amount of documentation. Similarly, if you go to further audit procedure side, so mostly further audit procedure, test of detail, everything is already coming to you as an audit evidence, right? Vouching, verification points, control, relevancy, all the process and procedures, everything will be collected by you and that will be documented. So here also nature of audit procedures to be performed. Then the identified risk of material misstatement. What do you think, if I identify that ROMM will be more, then the level of documentation should increase or decrease?
Increase.
Increase, na? Increase, right, everyone? Any doubt? It's obvious, right? If the risk is bound to be more, then I need to increase more and more. I cannot rely simply on less documentation. Then the need to document a conclusion or the basis for a conclusion not readily determinable from the documentation of the work performed. That means what? That suppose you you did the working. This is the Excel file. This is the Excel file, and you did all the workings. And now, based on the working, the last column, you are deriving one conclusion. You are deriving one conclusion based on the workings, and it says what this conclusion is not readily determinable from the documentation of the work performed. So what conclusion you draw from the last point now, this conclusion not everyone can draw from the point that they will all they even if they are able to see the working Excel file, but still the conclusion that you have drawn might not be able to be drawn by the same other persons also. So in that case, you need to conclude, you need to document those conclusions also, the judgment, the basis of opinion, the basis of conclusion, everything has to be documented separately in case the conclusions that you draw are not readily determinable from the workings that you are performing. Are we clear? What do you think the audit evidence that you obtain, if it is more significant, the significance of audit evidence obtained, then will it be more increase the audit documentation or will it decrease the audit documentation?
Increase.
Increase, right? Yeah. Why decrease? Why decrease? Increase only, na? Audit documentation, audit evidence significance is important. Then definitely you need to document that, na? If it is an important audit evidence, you need to document that audit evidence. That is why the documentation will start then increasing. If you are obtaining all the important audit evidences, then the nature and extent of the exceptions identified. So exceptions that you identified, is it material exception? Is it immaterial? If material, then the documentation has to be done. And similarly, the audit methodology and tools that you are using. So which tool are you using? Are you using Idea or are you using any sort of other software for audit? So there are lot many software. Some firms also build their own in-house softwares. So are you using which software and the data methodology and tools used? Go through the question just beside this, and also how we could learn. If you want, you could learn like this. ऐसा नहीं है, ये methods के भी exception है. SNIA, ये methods के भी exception है. SNIA.
If the audit evidence is significant, so then we can reduce the amount of audit evidence required now.
Then you can reduce the number of evidences.
Number of evidences, yes.
So whatever evidence that you are obtaining, that should be sufficient and appropriate audit evidence. So sufficient appropriate audit
Yes.
evidences will, then you are saying that sufficiency will decrease. But it meant like it wants, what I believe it wants to say, that if the audit evidence is important, then you need to document that. If audit evidence is not important, you might then, if it's not coming into the your purview of SAI, sufficient appropriate audit evidence, then okay, fine, you obtain the audit evidence, but it's not useful. So you can then ignore. But for obtain, if you have obtained sufficient appropriate audit evidence, it's a significant audit evidence, then whatever be the audit evidence, you need to document that. So in that sense, the documentation will increase. The documentation has to be done, or the audit evidence has to be kept with you as an audit evidence. So you are saying that total number of audit evidence will decrease if the quality of audit evidence is important.
Yes.
Appropriateness
Quality
of
of
the audit evidence. Yeah, you can say in that manner as well. If the sufficiency and appropriateness of the audit evidence, that is
is
size,
met.
appropriateness is increasing, then sufficiency, number of audit evidence can decrease.
Okay.
Now you can see here what all points are covered in the audit documentation that we have already seen our analysis Even the audit plan we saw, it is also included in the audit documentation only. Then memoranda, something rough working issues memoranda, whatever memoranda you have issued, summaries of all the significant matters, then all the letters of confirmation and representations, all the confirmations from the management, from the debtors, from the accounts payable, all the confirmation from the bankers, checklist, correspondence including email correspondence, special contracts. These are all what is covered under audit documentation. So audit documentation is not a substitute for the entity's accounting record. That means what? Accounting records, whatever accounting records that the entity is giving it to you, they can't say that okay, this is only our audit evidence, this is only our confirmation, so treat this only as our confirmation evidence and this is the financial statement that is true. No, audit documentation has to be comprising of your analysis, your evidences, your program, your planning, your confirmation representation apart from the entity's accounting record. Accounting record is not, is different and audit documentation is different. The same thing you will come across in SA 580 also, where whatever you obtain from the management is got management confirmation, management written confirmation, but accounting records are not covered under management written confirmation. Those are not written confirmation. So written confirmation are audit evidences, although it might not be sufficient and appropriate audit evidence of their own, on their own they are not SAI, but they are audit evidence. But again, written confirmation do not include accounting records. So accounting record is the basic thing that has to be provided by the management. That's not an audit evidence, that's not an audit documentation, right? Then assembly of the final audit file. You should not delete the audit documentation before the end of its retention period. What was the retention period? Again.
7 years.
7 years
7 years from the date
from
of
the date of audit report.
auditor's
Audit of
report.
financial.
So generally auditor will have to complete this administrative process of assembling the final file. So final audit file has to be assembled even in the case when you were doing the audit. So generally in our firm, what have used to happen was after the entire audit is finished, we had to go through the entire audit file and show it to the principal that okay, these all things I've done. We would separately enclose just above the file one cover page which will include what all points, what all files or what all papers are covered in this file. So kind of that assembly you have to do, and the time period for completion of the assembly of the final audit file is ordinarily not more than 60 days after the date of auditor's report. So remember, 60 days, 7 years, 60 days, 7 दिन, 60 दिन, 7 साल. If you want to recollect on those lines, 60 दिन, 7 साल. The completion of the assembly of the final audit file after the date of audit report is an administrative process. So do you think, are you even performing any sort of audit procedure after the audit report is being issued, after the auditing has been done? Now when you are assembling the final audit file, do you think, are you performing any audit procedure, sort of any procedure in accordance with any standards on audit? No, right? We are just assembling the audit file, working papers, everything we are just assembling, collating. If at all we have any duplicate working papers, then we will remove duplicate from them. If at all we have missed, then we will take a copy and then enclose it in our working file. We will simply do what? We will just like I told, enclose one cover page and include all the points. We will do the cross referencing. This you can refer to this, or cross referencing, sticky notes, whatever you want to include, right? These are not any additional audit procedure that you are performing. These are what? Administrative process which do not involve the performance of new audit procedure or drawing of any new conclusion. However, changes may however be made to audit documentation during the final assembly process. That means what? Already what you have documented, the changes could be made in those documentation while you are finally assembling the audit file. But these changes should be administrative in nature. Can't be a significant change where standard, what the procedure that you performed itself is changing. So whatever changes you are making in the final assembly audit file, final assembly process, it should be very administrative in nature. Just like I told you, it could be removal of duplicate documentations or inserting of cover page which will include all the files all the papers which is included in this work final file. Similarly, cross referencing, these all documentation changes, administrative nature of changes you can do. That is what they are saying. So example of such change, important, can be asked, not yet asked. Anywhere, nowhere it has been asked. They can simply ask what all changes in the audit documentation during the final assembly process are permissible. So you'll have to write if they are administrative nature. Examples of such administrative nature changes are deleting or discarding superseded documentation. That means what? Duplicate files, duplicate papers, deleting the duplicate papers, sorting, collating, cross referencing, giving the book note, bookmarking, right? Bookmarking and sorting. That means what should come first, what should be at last. Signing off on completion checklist relating to the final file assembly process. Lastly, documenting audit evidence that the auditor has obtained, discussed and agreed. So SQC1 gives the retention period of 7 years that we have already gone through. However, there could be a case where after the date of audit report also you might need to perform a new audit procedure. So auditor performs new or additional audit procedure. There could be cases after issuance of audit report that we'll study in SA 560 subsequent event. More or less, there are very rare cases. But after the audit report, auditor perform, if at all he performs new or additional audit procedures or draws new conclusions after the date of auditor's report, then auditor will have to document the circumstances because of which this new procedure would have been performed. Any new additional audit procedure that you performed, audit evidence that you obtained, conclusions reached, and then who and when the changes were made in the audit file, and who reviewed the same, who reviewed the changes, who made the changes, when the changes were made, when it were reviewed. Again, this is also important, not yet asked. Yes, so coming on to the next topic, documentation of compliance with standards on auditing. So do you think like standards on auditing compliance, SA 200, I don't know you have read it or not, but it includes a point on professional skepticism that auditor in all throughout his tenure of audit should maintain a professional skepticism, an attitude of questioning mind, right? So this attitude of questioning mind, this is a mandatory requirement of SA 200. So do you think this also has to be documented that yes, I have maintained an attitude of professional skepticism? Can I document this? All other points, that okay, engagement partner is direction, giving the review, giving the supervision, properly supervising, properly reviewing, properly directing. There are so many points in standards on audit. Do you think every point needs to be documented?
No, sir.
No, right? Not all points can be documented, and not neither it is required for you to document all the points, because the engagement partner doing the direction, reviewing, supervision, this will already be communicated in a sense. This is substantiated in a sense. You can just go through the mails whether the engagement partner is attending all the meetings, all the weekly meetings or all the meetings of the audit, are they supervising. In the mails only you can go through that yes they are doing the direction, review and supervision in a properly manner. Similarly, what I told you was with respect to professional skepticism. So it is obvious through your findings, through your issues that you have raised during the audit. So whatever issues that you raised during the audit, the mails, whatever, all these points, by this only it is obvious that yes, you are maintaining an attitude of professional skepticism. You don't have to separately document that I have been maintaining attitude of professional skepticism. Clear? So that is what it says, that documentation provides evidence that the audit complies with the standards on auditing. Yeah, that is for sure, that documentation, the sole purpose is what? That it complies, that it ensures that yes, essays are complied with. That is what is the documentation is done for. However, it is neither necessary nor practicable for the auditor to document every matter considered or professional judgment that you made. So every professional judgment you made, do you need to mandatorily document that as well? No. So for further, it is unnecessary for the auditor to document separately compliance with which matters with which compliance is demonstrated by the documents included within the audit file. So that is what they are saying. Like just like what I said, the documents which is included within the audit file, the documents like example mail chain. You can see that yeah, engagement partner is directing, engagement partner is supervising properly, engagement partner is communicating to us, is properly involved in the team meetings everywhere. That means what he is doing his DRS performing appropriately. That is included within the documents. That does not needs to be separately documented. Similarly, same goes for professional judgment, professional skepticism. So examples they have given, and this was also asked in May 22 exam. Example, that means the question was that the article was saying that not all the things has to be documented, but the principal was insisting upon the auditor on the article that no, this has to be documented, all the points has to be documented. Like he was kind of our Sundar sir when I was in L&T. So Sundar sir used to say that this point has should not be missed for documentation. This point, this point, this point, that point. Not even you are breathing, that also has to be documented. If you are breathing, if you are going wherever, has to be documented. Kind of in a sarcasm, but yes, he meant to be a detailed documentation has to be followed. So that is what here the principal was insisting upon the article that this also has to be documented, that also has to be documented. But the article assistant said that no, not all things has to be documented. ICI asked you give the exam who is correct first of all, and examples where audit documentation might not be required. So examples where which is documents are included within the audit file. Examples: existence of an adequately documented audit file demonstrate that the auditor has planned the audit. Wow, that says what? Audit plan itself says what? Audit is planned, don't worry. So SA 300 compliance is done away with. SA 300 planning and performing the audit. SA 300 planning and performing the audit, it says what? You are now deemed to have complied with SA 300 planning the audit if you have performed or if you have made an adequate audit plan. You have made an adequate plan. Similarly, existence of a signed engagement letter in an audit file demonstrates that the auditor has agreed the terms of audit engagement with the management or where appropriate. TCWG, or definitely right. You don't need to separately document that we agree with the management's view, management agree with us our view. No, already it is deemed in the engagement letter itself, which is included in our audit file anyway. Then the auditor's report containing an appropriately qualified opinion demonstrate that the auditor has complied with the requirement to express a qualified opinion, that the auditor has gone through each and every point which is given under SA 705. Don't need to again document the same. Then in relation to requirements that apply generally throughout the audit, there may be a number of ways in which compliance with them may be demonstrated within the audit file. So that is what they are saying, that general requirements that are applied, there could be many number of cases where you are not required to supposed to be documenting each and every point. That is obvious, that is deemed documentation. For example, they have given evidence for maintaining professional skepticism, right? Similarly, evidence that the engagement partner DRS may include documentation of engagement partner timely involvement in the audit meeting, participation in team discussion. So what the 2 points that I was telling you earlier, those points again they have given as an example, and from here only they have took the question. They have drafted a question and asked in May 22 exam straight away. Nowhere mentioned, in nowhere RTP, MTP, nothing. Just go through this ownership. It's easy. We have already covered this in lot many places. Just go through this. If any doubt, then yes, please ask. Else we'll start with essay 240 at 10:45. Yes. 2:30 done. Reading wise, have you given one reading? It's a short standard, very small standard. So you should now, after like 2 or 3 revision of the standards, you should then be able to determine how much time you should give for each next revision. So essay 210, you should give only like 8 minutes. Essay 220, you could give what, around 15. 230 again small standard, 10 minutes. 240 is a big standard, so you can give 25 minutes. So that should be the target for you to revise in this much amount of time at least, so that you are also efficiently productively revising and at the same time not wasting a lot of time. Target specific. And you will also get to know how much time you will be left with in the time of, that means in your last day revision. So just try to, after like 1 or 2 revision, try to then target how much time you should give in your next revision, how much time you took for this revision, how much time you should give for next revision. Yeah, so any doubt in this ownership? Yes or no? Everyone's back or not?
Yes, sir.
Chalo, let's start with now very important standard in essay 200 series. Mostly you will find a question from essay 240, and it's a big standard as well. It's a big standard, it's an important standard, and you have to do it thoroughly, each and every part of this standard. So essay 240, what does it say? Auditor's responsibility relating to fraud in an audit of FS. Auditor's responsibility relating to fraud in an audit of financial statement. So scope wise, if you see, it expands on how SA 315 and 330 are to be applied in relation to ROMM due to fraud. So what does SA 315 and 330 says? You must have gone through audit procedures, right? So risk assessment procedure and then further audit procedure. So in the risk assessment procedure, we identify inherent risk, control risk, right? We identify the risk, and total overall we call this inherent risk and control risk as what? Inherent risk into control risk is called as what? ROMM, risk of material misstatement. So this ROMM, based on this ROMM, we then perform further audit procedure based on our professional judgment. How much procedure we need to perform. That means what, we are responding to this ROMM. So SA 315 name is what? Understanding the entity, its environment, including its internal control. SA 330 name is what? Responding, responses to assessed risk. So whatever risk that you assessed in SA 315, you have to respond to those risks. So responses to assessed risk, SA 330. Now the risk of material misstatement, in addition to that, if there is any fraud risk, if there is any fraud risk, then this essay expands on SA 315 and 330 to cover the fraud risk as well. That means you have to identify those fraud risks and also respond to those fraud risks in accordance with SA 240. Are we clear with the scope? Scope wise, if I ask, yes, any doubt? SA 315, understanding the entity and its environment, including its internal control, and then SA 330, responding to assessed risk. So this risk, while identifying and while responding in 315 and 330, you will also have to additionally identify and respond to the fraud risk. So there could be a possible various sources of misstatement. Misstatement sources. Generally, you might be aware about 2 sources of misstatement. Anyone? Misstatement can arise from
Due to
fraudulent
fraud or error.
fraud or error. Yeah, that is also true. Fraud or error. But in the financial statement, when I'm talking about misstatements in the financial statement, there could be
False journal entries.
journal entries. What?
Fictitious false journal entries.
Fictitious journal entry, false journal entries. Okay. but that comes under FFR, fraudulent financial reporting. That comes under FFR, fraudulent financial reporting. This used to be asked in your IPCC directly, straight away, straight question. Define fraudulent financial reporting, or which is a type of fraud risk, and also determine how FFR could be created, or how FFR could be entered into fraudulent financial reporting. Then other is misappropriation of asset. You can straight away do the stealing, theft of assets, steal of assets, or any sort of misappropriation of the assets. So two types of you can say misstatements can arise from potentially two sources. One is fraudulent financial reporting, that means you are reporting fraudly. Another is misappropriation of assets. So fraudulent financial reporting is accompanied by, that is the definition of fraudulent financial reporting. You can either manipulate the books of account, falsify the records, alter the records, omit the records, omit, उड़ा दो. So false manipulation, falsification, alteration, supporting documentation, misrepresentation or intentional omission, and could also apply misapplication of accounting principle. For example, you deliberately applied SLM method of depreciation instead of WDV, or deliberately applied WDV instead of SLM, where you could get the benefit of, suppose, in the terms of profit going in your favor, or you could increase the provisioning expenses if at all it is the case. So manipulation, falsification, alteration, misrepresentation, intentional omission, intentional misapplication of accounting principles. Again, what does FFR includes? Manipulation, falsification, alteration, that is what? Altering, manipulating. Then second is omitting in itself, omitting either purposefully or omissionally or intentionally. And third one was with respect to misapplication of accounting principle, that also comes under where? Fraudulent financial reporting. Financially you are reporting false, na? You are reporting false. Fraudulently you are manipulating the accounting principles, misapplying the accounting principle. You should have applied WDV but you are applying SLM. You should have applied FIFO but you are applying LIFO. How do you commit FFR? That is the question which came in my attempt, November 2020. How do you commit FFR? So it's very easy. So in the close to the end of the accounting period, particularly directly in the close to the end of accounting period, if you see that there are many journal entries, particularly at the end of the close of the accounting period, end of the year, you'll see a lot of journal entries where they are trying to manipulate the result of the entity, operating profit of the entity. They're trying to manipulate all these figures. So they'll pass few of the other journal entries, fictitious journal entries. So generally at the close of the end of the accounting period. Then second is to manipulate the estimate account balance. Estimate account balance generally will relates to what? Provisions. Getting it, reserves, or not reserves but provisions, many provisions, bad debts, doubtful debts, non in like investment provision on investment, investment impairment, any sort of provision where judgment is required, where your management judgment is required. There you can easily manipulate those provisions amount, right? When you expect 5% instead of 2%, in the next year you expect 2% instead of 5%. So manipulation is in your hands. In the case of provision, account, estimate account balance, we say what we said, those balances as estimate account balance. That will come across in SA 540 also, estimate account balances, because those are estimative in nature and those are balance account balances. Then omission, directly omission or advancing the entry, either you are delaying the entry or advancing the entry or omitting the entry, right? Concealing or not disclosing facts, not at all willing to disclose the facts, altering the records related to significant unusual transactions, and you are entering into significant complex transactions. That means I'll be paying it to Nupur, then Nupur will pay to Arnav will pay to Dhanlakshmi, then Dhanlakshmi will form a business in which they will expend it to Krupali will then again resort to Nikita, and then it will come it back to me. So money is coming back to me, but in a very complex transaction. Complex transactions is being created. Fictitious complex transactions, entries, all these are ways to commit FFR. So how can you easily learn this? That CEO ने facts conceal किए. That means CEO did the fact concealment of the facts, and he also altered the records. And through this he made a complex transaction. सो सी ने फैक्ट्स कंसील किए, रिकॉर्ड्स अल्टर किए एंड इससे कॉम्प्लेक्स ट्रांजेक्शन बनाया. सी ने फैक्ट्स कंसील किए, रिकॉर्ड्स अल्टर किए and through this he made a complex, or you could say complex transaction. Yeah. So CEO, C here for close to end of accounting period, you are entering fictitious journal entries. E for
Estimate account balance.
estimate account balance, and O for
Omitting.
omission. Omission or advancing or delaying the entries or recognizing the income or expenditure. Then facts conceal case, so concealment of facts. Records alter case, so altering of the records. And through this you made a complex transaction. Everyone got the story? CEO ने facts conceal किए, records alter किए and इससे complex transaction बनाया. So by this you could easily recall all the points, mostly all the points. I easily recalled the points even though I didn't revise this. I'll tell you what, 4 to 5 questions out of standards or in other chapters also were those questions which I couldn't revise at last day revision. So what actually happened was November 2020 exam, SFM paper actually came a bit tough, and what my level of preparation was with respect to 90 plus. So 90 plus, after leaving the hall, I knew that exactly I didn't perform well. It would be around 80 to 90 lines. Then after discussing with friends, I came to know that okay, now it would be around 65 to 80 lines. Then after coming back to home, I saw video of one of the leading faculty, and he made further correction that no, this is an ambiguous question of ICI, so that has to be done through that way. But I found that that was a new question. So anyway, if I was thinking that if the faculty what he was saying is exactly true, or he might be aware that yes, this is an ambiguous question, had to be solved in that way, then fine. I simply went back to 40 line 40. So what I was expecting and what I went was in complete opposite direction. And then I at that time I also had the option of postponing the exam. November 2020 student had the option of giving the exam in Jan 21 because of COVID. So that time I was so like kind of very stressed, and at the same time I literally cried the entire night after coming back SFM. Next day also I didn't start studying audit. I was all the time thinking of postponing the attempt to Jan 21 because I was not at all satisfied. I started at around 3 p.m. 3 p.m. next day audit. So I couldn't revise the entire audit. But anyway, what I wanted to convey is the tricks like this. Even if you don't recall now, at the end in the exam, if it comes, even if you are able to recall, suppose omission or concealment of facts or fictitious journal entry close to the end of accounting period, just this one point close to the end of accounting period, you will able to recall the trick how we learned CEO ने facts conceal किए records alter किए complex transaction में you by that particular point you will be able to recall the memory trick, and from the memory trick you will be able to recall the rest of the points that I have witnessed. Definitely if I am telling you this empty, then okay, it might take you for 2 or 3 times further revision, but if you are yourself making certain way to recognize or recollect the answer, then that will also boost even further your retention power. So this I didn't I particularly remember this question. I didn't revise this at all, but this came and I was able to write as it is, write all the points because of this.
Sir,
Yeah.
you made the notes for the audit.
Notes for the,
Audit.
you mean handwritten
During
notes?
your preparation, you made the. Yeah.
Yes, how is your approach to audit?
So for approach sort of I didn't made handwritten notes for 70% of the chapters, you can say. 70% of the chapter I used to do what, I was following up material. So whatever I was going through in other materials like SM, or when I was following the RTP, MTP, or whenever I am going through institute material, so I was then trying to collect more or more points which is not there in my material. So what I used to do was I used to just write here or there, and if not able to write, then I would just write here, see screenshot dated this, very important, see screenshot. So at that time, now the book has improved, it's a leading faculty book, but my time I particularly remember the book had so many wrong answers of I say suggested answer. So I did what that I went through all the ICA question and went through all the ICA answers. So whatever ICA question, there used to be an attempt just written below that. So I used to open that suggested answer or RTP or MTP, and I used to tally the because I was dejected by the fact that many of the answers were not telling with the suggested answer. So then there I used to write that C suggested answer from screenshot dated. I used to take screenshot. If at all that answer is not correct, what if at all I know that yes, okay, this will anyway be included in the answer, but further to that there is a remark also which is given by the institute of 4 or 5 lines. Then I'll simply include the remarks here, suggested conclusion part, what you see. So conclusion I'll include here. So whatever additional you are coming across in MCQ while solving the question, you could just include. So once you start including, you will tend to retain the answer and the conclusion, everything that you include. Once you start writing and including it, you will tend to recall the topic as well as what you have included. That is a fact. You have to, like, what I can say is proactively insert or make your notes. If you want to make your notes specifically, I would not recommend that given the vastness of the subjects. Would not really prefer that. Instead you could use that in a way where it is not been made for you for other subjects like kind of FR or I don't know for any subjects that you, because these notes are pretty handy I feel, because the way I prepared is what the way I would have wanted it for my last day. So if you could see, this is a book of 400 pages only, right? So that is not hard enough for you to cover the entire book. As against the study material, if you see those study material, bunch of books are there. I think 3 or 4 modules are there, and then again other question answers as well. So here you could also include the questions MTBs all at one point only. That is what I am targeting. You should include everything in this juncture only, and while including you will tend to retain, while you including you will tend to recall, and in the next revision you will recall that okay, this was written given in this that answer, suggested answer. You won't need to go again and again to the suggested answer of the IC. Just the key crux and everything additional that you find you can include. Although in my here whatever additional that I remembered I have included. So here if nothing specified, you could simply be done away with this answer by specifying these points. That is how you commit fraudulent financial reporting. So suppose in the question, just like we did what this question, you remember this question, independence. So how I have framed the answer, you will write independence write up, entire write up plus 3a point. 3a wala point was there in the suggested answer, so I just mentioned 3a point plus engagement partner is not right. That is the conclusion. Engagement partner is not correct in not allowing the EQCRR to do the independence uh, review, right? And then lastly, the independence assessment document should also be given to EQCRR for his review. That was the conclusion. So the answer writing, you knew that this and this is the main answer, my main answer. But apart from this, the conclusion is also what I would focus on. Similarly, here is the case when signing partner died before signing the audit report, another partner therefore signed the audit report. So what I have here written is key points, all the key points which was there in here, review points. Then apply the review procedure. Plus, then you will write that he has to carefully direct, supervise, and review the work which is delegated. Whatever work was delegated, auditing partner has to carefully direct, review, supervise. DRS has to be performed by the engagement partner. This was there in the suggested answer. You won't find this here, but it's there in the remarks conclusion column, right? Conclusion point. Plus, entitled to rely on the work performed by the others. He is entitled to, of course, obviously rely on the works performed by the others, provided he exercise proper due diligence and care. That is a conclusion which, if you draft accordingly, then you will get full out of full. So by including this as well as the question just beside the topic, you are able to connect the dots how the topics might be tested by the ICA. At the same time, you will tend to retain the topic bit longer and a bit in a fashionable way, so that you are also able to recall the conclusions part. Generally, conclusions you will then do what? Conclusions you will give of your own. But what is the damage if you could just write the conclusion of the institute and try to revise those conclusions only more and more times? If the same question comes up again, even if they frame it in a different manner, you could use that conclusion, right? So that these all small things can improve your score. And particularly the book summarization, I would not law. I'm not. I started law actually teaching then Lakshmi, but right now I'm not really having the time. Yesterday I came back from office around 1. So I messaged you around 3, or you all. So 3 a.m. I could sleep. So actually the time is not, time is the issue, main issue. Else I could have taken up that. Anyway, in case you are facing any issue in law, you can anyway write in our group only. You can use that group. No one is using the group. Our group what we have created. You can use the group for other doubts in other subjects, or if you want you can create another group. I can create another group for all your doubts. In case you all can clear each other's doubt, then that is best. And if not, then I'll jump in and try to clear the doubts if at all I am able to. I don't think for SCMP I am very much like touched for this the touch is not there much, but definitely for FR SFM law, for group 1 subjects, for you all, you can all use that group as well for clearing each other doubt. You should try to clear other person's doubt, and if not, then I can clear. Let's see then, Lakshmi. I particularly don't think I'll be getting the time. That's why I'm not committing. Okay, for law. So now come to next point, fraud risk factor. Yes, one more point here was misappropriation of asset. So FFR I have included, misappropriation of asset I have not included. So misappropriation of asset, more or less you will write these points, because these points are more or less similar. If they ask you on misappropriation of assets, then just write this. Um, you could just two types or ways to commit fraud. One is what? FFR discussed above, and second is misappropriation of asset discussed below. Now this is also risk factor, fraud risk factor. So what do you consider, what do you mean by risk factors? Fraud risk factor or sampling risk factor, if you might have come across. What is risk factors? Yeah,
So
what is
risk factor, according to me, sir, risk factor is such factors which leads to material misstatement.
So risk factors are the factors which could lead to material misstatement. That is kind of, yeah, definition. But that is you can say is what factors because of which whatever we are doing could not be correct way. Or suppose because we are following sampling, then what are the risk in the sampling? Those are what risk factors, sampling risk factors. So similarly here, fraud risk factors, wherever you are performing any sort of activities in the entity, so there are fraud element involved in the activities itself, right? So there could be fraud risk factors involved in each and every activities of the entity. So what does this say? Risk factor arising from statement arising from FFR and MOA, classified generally in 3 categories. So if they ask you for MOA or even for FFR, you can answer this, although in bare standard they have mentioned separately, for FFR separately, for MOA separately. However, common points I could compile. For common points I could compile, and this is more or less sufficient. If you could just give two points under each category. So category is same. For FFR category is same, for MOA category is same. Category here is point bullet in bold point. What you could see: incentive or pressure to commit fraud, perceived opportunity to do so, and rationalization of the act. So these are same. Inside that there was a bit of difference for FFR and MOA. This is particularly for FFR. However, most of the point, 70-80% of the points are also there for MOA also. So am I making it clear that whether they give fraud risk factor for MOA or fraud risk factor for FFR, you could use this only. If you want, you can then again visit the bare text of standard and see if at all there are other differences in fraud risk factor of MOA. So let's just cover fraud risk factors. So first is incentive or pressure to commit fraud. Incentive or pressure to commit fraud. So there could be two ways of pressure. One could be your office pressure, right? So office, your sales manager or any other your manager, lead manager is pressurizing you to increase the sales, to increase the profitability, to decrease the cost. So in that way there could be a pressure on you. If not fulfilled the, or if you are not satisfying your manager, then it might lead to demotion of your job or any sort of pressure is there. Then you might resort to what? Fraudulent practices, right? Then you might resort to fraudulent practices, fraudulently manipulating the profit, fraudulently manipulating the revenue cost. So this pressure, under pressure, management is agar under the pressure to achieve unexpected earning target or financial outcome. Unexpected, that is not expected, that means unrealistic, non feasible. Similarly, personal financial obligations. Now Arnav will have personal financial obligations. Suppose after clearing chartered accountancy he is doing a job, and now one fine day his wife tells that if you are coming home today, then bring along with you one diamond necklace, else don't come home. Straight away the warning is been there, and now Arnab is under huge pressure, personal financial obligation. So this can also create what? Pressure on management or employees, particularly those employees. Arnab is into what? Cash department. So we'll now get an idea that let's use this cash of the organization to buy a diamond necklace. Then we'll see what we can do later. So particularly employees with access to cash or other assets susceptible to theft or to misappropriate those assets. So one is personal financial obligation, other could be your commercial or financial obligation or office financial obligations. Then perceived opportunity to do so. What does this mean? You are finding an opportunity, then how can you leave that opportunity to do a fraud? So there could be a case where individual believes internal control can be overridden. That means what? There are internal controls, but those internal controls can be lapsed or can be bypassed. Because suppose I am here in the organization since last 15 years, and I know each and every internal controls. I know how the new controls are framed, how the old controls were there, and because of why the old controls, there were certain lacunae in the old controls because of which new controls were framed. However, in the new controls also I know certain lacunae are there, certain loopholes are there, and I know that these internal controls can be easily overridden. So there I see an opportunity, and therefore I might exercise that opportunity. So for example, because the individual is in a position of trust, I have been in a for more than 15 years, I have been held in a position of trust, right? And I have a knowledge of specific weakness in internal control. Similarly, there could be opportunities to misappropriate assets increase in case of high value inventory items. So this could be a case of, suppose example could be jewelry shop. So jewelry shop, generally inventory item you will find what? Very small in physical appearance, but however value wise you will find what? High value. That is what? High value inventory item. So one ring, one diamond you pick, and the loss is huge loss or huge theft. So inadequate internal control, high value inventory item, inadequate SOD. So SOD is the most important internal control. When you will go through chapter 3 tomorrow, SA 300 series, we will find SOD, segregation of duty. So if I am preparing certain report, then I cannot check. The checking has to be done by you, Nupur, or any other person who is in my department, but not the person who has made the report. Maker checker. SOD is also in the banks, like one who is doing the cash cannot sign for the demand draft or cannot collect. One who is recording the cash cannot collect cash. One who is recording trade payables cannot pay to the trade payables. One is recording data recording means accounting entries, cannot accept payment from the debtor. So there has to be segregation of duties. Similarly, lastly is rationalization of the act. Are you getting the logic of a SOD, right? SOD logic here being, if I am only receiving and I am only doing the entry, and I am only receiving the amount from debtor, I could easily manipulate. Have you heard of teaming and leading? Teaming and leading fraud. Teaming and leading. Yeah.
Yes, sir.
Amount received from.
Right. So
Yes,
amount
sir.
we receive, we put it in our pocket instead of pocket of the business. We put it in our pocket, we use it for our purpose, and the next amount that we receive from the next debtor, we'll put it in the first debtor, right? Who has paid the amount, but whose amount we have taken. will then put the payment to those debtors. Similarly, such a practice will be carried on. Such a practice will be carried on till a communication is being made by the debtor to the main owner, or any sort of there is certain breach. Still that time, thus such a practice can be carried out, and that is called as what? Teaming and leading, where money of the organization is being used by the cashier. This is happening why? Because I am only recording the payables or receivables, whatever be it, and I am only handling the cash. So there has to be SODs. Then rationalization of the act. Some individual possess an attitude, that is what? Dog's tail, right? Dog's tail, कुत्ते की पूछ कितना भी कर लो वैसे की वैसे रहोगे, right? Whatever you do, your character or set of ethical values imbibed on you is kind of like that, where you will find that wherever opportunities arise, you will tend to capitalize on those opportunities to steal or to cheat. So some individual possess an attitude, character, or set of ethical values that allow them to knowingly and intentionally to commit a dishonest act. Similarly, even otherwise honest individual can commit fraud in an environment that imposes sufficient pressure on them. Right? Just go through the question beside this. Guide CA Kumar. See, so they have asked for misappropriation of assets. ठीक है? Misstatements arising from misappropriation of assets, risk factors. This risk factor, what do I call? I call this as fraud risk factor. So that is what we just did, fraud risk factors. Everyone, it is easy. You can just try to write here MOT. If you want, you can try to remember this as return on investment. So R being rationalization of the act, O being opportunities, and I being incentive to commit fraud. Clear? This is an important question, so do revise this properly. Entire all the topics in essay 240 are important because they tend to ask this in 1 out of 2 attempts, essay 240 on an average. Out of 10, they will ask in 5 attempts. So it's an important standard, and almost of the topics have been tested. New topics can also be again tested, or even the same topics could be repeatedly tested. Now comes responsibility for the prevention and detection of fraud. Who do you think is the responsibility? This responsibility lies with whom?
Management.
Management, right?
Management.
So it is the responsibility of the management to prevent or detect fraud. It is the responsibility, the primary responsibility is of the management and TCWG, obviously. And management and TCWG have to give a commitment to creating a culture of honesty. Culture of honesty has to be created within the organization so that there is an atmosphere of trust built within the organization, and no person is actually involved in unethical practices or in a fraudulent practices. So responsibilities, how, what is the responsibility of the auditor? If the primary responsibility is of the management, what do you think is the primary, or here in SA 240, what do you think is the responsibility of the auditor? Yeah.
To detect the material misstatement.
Yeah, here also the primary responsibility which arise from SA 200, na, the general responsibility what the auditor possess is the same, that is to obtain reasonable assurance that the financial statement as a whole are free from material misstatement, whether due to fraud or error. Whether due to fraud or error, same responsibility is here also, and therefore to achieve that responsibility, we'll have to then go through certain specific procedures by identifying fraudulent situation, and if at all we do come across certain manipulative false entry, falsification, FFR, MOA, then we need to further investigate into that matter and investigate whether this indicates a fraud. And if it indicates a fraud, then what else next you have to do? You have to then stop relying on the management's confirmation, do further audit procedure. So those are all the responsibilities which is set within SA 240 that will then go through one by one. So first of all, let's see what is the responsibility of the auditor. So first they say is the responsibility is nothing as such specific, but general responsibility what we had earlier also, what reasonable assurance to obtain that the financial statement as a whole are free from material misstatement, whether due to fraud or error. Then secondly, as described in SA 200, there are inherent limitation of audit. There is an unavoidable risk that some material misstatement will not be detected. Some material misstatement will not be detected. Have you all seen Ye Jawani Hai Diwani? Ye Jawani Hai Diwani nahi. What was that movie?
ये जवानी है दीवानी.
हाँ, Ye Jawani Hai Diwani ना. Just now that 10 years wala. So that there is say na, however much you try bani, some things will be left, right? कितना भी कोशिश कर लो, कुछ ना कुछ छूटेगा ही. So similarly here also audit, however much you will try to obtain all audit evidence, even all reasonable assurance audit evidences, but still there are some things which you cannot cover. There are inherent limitations, and for that purpose you cannot give absolute assurance. So inherent limitations are there, an unavoidable risk that some material misstatement will not be detected even though audit is properly planned and performed in accordance with standards on auditing. Still there will be some misstatement which will not be detected, and this misstatement could also be a potential source of fraud. So the risk of not detecting a material misstatement resulting from a fraud, what do you think? The risk arising from fraud is higher or the risk arising from error is higher? Fraud or error?
Fraud risk
Fraud,
is
obviously, right? So that is
fraud
what they
risk is
also
higher.
say. The risk arising from the fraud is much more than the risk arising from the error. Why? If I ask you the reason, why do you think so?
So it has been planned and planned for concealing the facts.
Right. So it
Fraud
is
is
the
intentional.
sophisticatively carried out activity, right? Fraud. It intends to do something malicious, and error could be by mistake. So that is what they also said. This is because fraud may be involving careful organized schemes designed to conceal it. Now, if I ask you, fraud could be done by either by the management or either by the employee also. So who do you think which fraud would be more dangerous? Management fraud or employee fraud?
Management fraud.
Management
Management
fraud.
fraud. Correct. Why?
They are at the higher position to manipulate the performance.
They can do at higher level involving a lot of money, lot of right, huge amount as compared to the level of fraud which is being done at the employee level. चिंदी चोरी वाला fraud की बात ही नहीं हो रही. Management में बड़ा amount of fraud, right? So it is difficult for the auditor to determine whether misstatements in judgment areas such as accounting estimates are caused by fraud or error. So there are certain many a times mistakes in the judgments also. I this time I took 2.5% as PFDD, provision for doubtful debt. Next year I took 5%. So next year instead it was found that PFDD actual bad debts happened to be around 1%. So then this there was a misstatement in judgment what is I increased the provision. So this could not be attributed to a fraud. This could not be attributed to a fraud actually, because this is a judgment at that I made. So that is what they are also saying, that it is difficult for the auditor to determine whether this misstatement, because of the judgments, misjudgments that you carried, whether because of that is it a fraud or what. It is difficult to actually assess. And the risk of auditor not detecting a MMS resulting from management fraud is much more than the risk arising from the employee fraud, because management being at a higher position, it can be does have the ability to manipulate the accounting records. Auditor is responsible for maintaining an attitude of professional skepticism throughout the audit. You can go through this professional skepticism. It is same as more or less same as I said 200. But yeah, you can go through that. If you want, just go through this right now. Then we'll see what else we will do if we come across any sort of potential misstatement. Then what does that indicate? If it indicates, then what do we need to investigate into? What are the results of investigation and what does those results indicates? Everyone with me or not?
Sir, in that responsibility of the auditor responsibility only to have the professional skepticism, right? skepticism.
To have the professional
And
skepticism, to
this
give
all,
reasonable assurance. So for while you
but
are
these
providing
other points, other
uh,
points which you have discussed is not the responsibility of the auditor. This is kind of that
no, they are
normal.
actually they are trying to justify that the first point. The first point it said what the auditor's responsibility is to not to give absolute assurance that no there is no fraud. No, it is not like that. It is to give a reasonable assurance. So however much you do bunny, there will be some things which will be left because of inherent limitation of the audit. Then there would be a fraud involved because of management fraud, because of employee fraud. Management fraud could be more dangerous, could be more difficult to assess, could be more difficult to identify. Similarly, fraud itself could be more difficult to identify as compared to error. So in essence, they want you to justify that reasonable assurance only you can give. The auditor responsibility is to only give reasonable assurance, and that in an essence you will not be able to cover each and every misstatement. That is what they are
Yes,
justifying out of all the
yes,
points.
that is the explanation of the first point only. Why the
First and
reasonable
second point,
assurance.
yeah.
Okay. So only two is the responsibility, like for the reasonable assurance, and one is professional skepticism.
Yeah, you can say SA 240 mandates you to for have a attitude of professional skepticism, and at the same time SA 240 tells you that your responsibility is nothing but whatever your basic responsibility was as per SA 200 to obtain reasonable assurance. Yeah, now let's see procedures when circumstances indicate a possible misstatement. So what will you now perform as a procedure? What will you now perform when you come across a circumstance that indicates a possible misstatement? What do you think we should do now? You come across a circumstance where you think this could lead to a possible misstatement. Now what should you do?
Further audit procedures.
So further audit procedure you need to perform further assess whether this misstatement could materially misstate my financial statements. So there could be a misstatement, definitely. There could be a misstatement, but is it material or not? That then we have to assess by performing further audit procedure whether is it material misstatement, and if it is material misstatement, whether it is impacting my financial statement or not. These two things are very important for you. So that is what they say. The auditor should perform procedures to determine whether the financial statements are materially misstated, MMS. Then considering whether an identified misstatement may be an indicative of fraud. So wherever this misstatement you found, now this misstatement, do you think it is indicating to something? Is it leading to something, leading to a fraud? Then if yes, then you should consider the implications of the misstatement in relation to other aspects of the audit. Now you will start doubting on the confirmations from the management that you received. Start doubting on the reliance on the management. Start doubting on the integrity of the management, right? So once the misstatement you obtain, now these misstatements are also indicating or leading to the fraud, then you will have to see the what impact does it have on your audit. You'll have to stop making or reliance on the client or reliance on the management. Similarly, confirmations from the management, you stop relying on those confirmations because management integrity is biased or could be manipulated, could have been involved in fraud. And then thirdly, you should communicate this identified fraud or as an indication or even an indication or actual fraud has to be communicated accordingly to the management TCWG. And in certain cases, in accordance with rigor and regulatory requirement, also do mention section 143.12. So important tip here. Whenever question says about limited company or any sort of company under companies act, कुल मिला के companies act, company is there, then along with fraud ऐसे 240 answer do point out section 143 subsection 12, obviously, definitely, always. ठीक है. So there is this village, one village in Meghalaya. Not exactly, I don't know village or area, but there the names of the newborn childs are like framed in a whistle manner. So it could be or could be any other name. So they pronounce it like this only, and they call out the names on this in this manner only. I was just going through that interview one. Now comes risk assessment procedures and related activities. Now, as I was saying, do you remember the scope of this standard SA 240? I started with what? SA 315 and 330. Yes. Break after this standard, Sagar. After this standard, half hour more. And in the break time, you will also have to solve the questions of SA 240 if you can. We'll have a bit long break. Risk assessment procedure and related activity. So what I was saying was, do you remember where I started with SA 240? I referred to SA 315 and 330 for the scope. That means risk assessment procedures that we perform as per 315 and further audit procedure that we perform in accordance with SA 330 in order to respond to those risks that we identified as a result of risk assessment procedure. So risk assessment procedure and related activity, why it was mentioned? Because as I told, with relation to fraud also you will have to identify fraud risk. And how will you identify fraud risk? You will have to perform risk assessment procedure. So risk assessment procedure has to be performed here also. And how will you perform? First of all, you will inquire with the management or inquire others within the entity. So while inquiring, again a separate question can be asked. Probable future question not yet asked in any platform. Separate question can be asked that while you are inquiring within the entity or others within the entity, management's assessment of the risk of material misstatement due to fraud has to be considered. Then what is the management process for identifying and responding? So what will you be actually inquiring? You will be inquiring first of all, how does the management assess the risk of material misstatement arising due to fraud risk of material misstatement, fraud risk of misstatement. That means what? First point will be, how does the management actually assess the fraud in the entity? Are they able to detect the frauds or not? Are they able to assess the fraudulent situation that is arising in the entity or not? Then management process for identifying and responding to the events which encounters what? Fraud. So identifying and responding to the risk of fraud in the entity, including any specific ROF, risk of fraud. Then management's communication about this fraud that they have come across or identified. Then how does the management communicate to the employees, and how does the management communicate to the TCWG? How do they communicate? What is the hierarchy of communication? Because suppose there could be a hierarchy of communication, without reporting you directly communicated orally and one person got to know, and then the person who did the fraud was in an acquaintance of the person who got to know about the fraud, and they both then manipulatively or forcibly what hid the fraud. That means what? Rectified the fraud, whatever could be it could be. So the communication channel, how does the communication is being done to the employee, communication to TCWG is very very important. And lastly, for those entities that have an internal audit function, that means what? Section 139 subsection 8 wali companies, or no, that is casual agency. internal audit applicability Internal audit applicability section, does anyone remember section 138? 138 was there, okay, shayad, as far as I remember, section 138 was there with respect to applicability of internal audit. And that means what? If at all internal audit function is applicable to you, then in that case you can also inquire with the internal auditor, as simple as that. So you will inquire with whom? Inquire with the auditor, inquire with the TCWG employees, inquire with the management, that how management communicates through the employees, how management communicates to TCWG, how does the management assess the fraudulent situation, how does the management identifies the fraud, are they able to detect the fraud, are they able to detect the misstatement that is arising from the fraud in the financial statement? Everything has to be inquired into, because this is what how we will come across what all risks are there, what all risk of fraud, fraud risk, what all fraud risk are there. Generally, in inherent risk, control risk, in your risk assessment procedure, general risk assessment procedure as per SA 315 also, you do what? You inquire with the management, you inquire about the entity's operation, business, industry it relates to, what is the legal and regulatory requirement in the industry that it relates to. All these inquiries you have to make. Similarly, all these inquiries you will have to make here also. Fraud risk assessment procedure. Clear? Everyone?
So, what
Uh,
does IF mean? Sorry, what does IF mean?
IAF is internal audit function. IAF you can write internal audit function. So what is internal audit function? Is an internal audit team, you can say. So like when I was in L&T, I was involved in internal controls and internal audit department. There we in the head office Mumbai, we used to have a 28 people. 28 people headed by three managers, and then again headed by Sundar sir, who used to head Mumbai and central region internal audits. That means L&T has so many branches, so many locations, right? Even it has in Raipur also, if you could see in that Sagar, just in front of Magneto Mall. So internal audit function is what? Internal audit team. Similarly, one south branch was headed by another department, or another department used to handle south. So Chennai, Bangalore, or each and every department of L&T in south used to be handled by different person. So these all is what is our internal audit function, IAF.
Okay, sir.
Now this question arise important, very very important. I think this is November 19 question. Mark this as important also. Appropriateness of making inquiries of management. Now what does the question says? I am not exactly getting the question. Can anyone of you tell? Why are they telling you appropriateness of making inquiries of management? Is it appropriate of us to make inquiries with management? This is the question. Is it appropriate or not? But why? Again, why are we questioning the appropriateness of the inquiry? Yes.
So if management himself is involving in the fraud, so why will it ask management?
So above all the points, management will be communicating to TCWG, management will be communicating to employees or management. How do they assess the fraud? But again, rightly said by Arnab, if management is themselves involved, then what is the point of inquiring with the management, right? So is it really appropriate for you to inquire with the management? That is the question. Why is it appropriate for you to inquire with the management? Now again, I'll say yes, it is appropriate for us to inquire. It is relevant for us to inquire with the management. Why? What do you think? What points you can come out with? Yes. Anyone? Nikita, Nupur? Try to get some a bit of proactiveness. Try to have that assumption in the answer, assumption of the points that could be in the answer, so that definitely that point, if you could come out with, definitely you won't be forgetting that point.
So what is the question?
Question is that appropriateness of the inquiries with the management. So just now I asked, is it appropriate for us to inquire with the management regarding this fraud? Then Arnab told no, it could not be appropriate, because what if management themselves is involved? But then yes, there that could be a reason for us to question whether the appropriateness is there or not. But again, I am saying that yes, it is appropriate for us to inquire with the management. On what lines, on what grounds, on what points?
So, if we came across any misstatements or red flags regarding the frauds, then we can question the management now.
But that is not the exact answer. But this again could be countered by Arnab, that what if that in those red flags management themselves were involved? Why are we have to inquire with the management? Why do you think so?
So
Uh,
to see the to see the internal controls and preparation of financial statement and the management assessment of risk.
Management assessment of risk, right? So particularly I could say, if not management, then whom? If not management, then whom we will ask, particularly first. Then secondly, management is the only person who is responsible for establishing internal controls, right? For the preparation of FS in accordance with applicable FRF. Management is the only person who is responsible for implementing IC for the purpose of preparation of FS in accordance with applicable FRF. So this IC particularly helps you what to avoid fraud. So if this IC is prepared by the management, implemented by the management, then it is right for us to inquire with the management only, or else who else can we inquire into? Secondly, management own assessment of fraud is inquired. We assess here also what, how does the management, how does you assess within the entity, how do you assess, the fraud? Then this question, own assessment question, could help us to evaluate how does the management pointing out this question into, like, how much serious is the management actually in their assessment. If they are serious, if they are saying that okay, we are assessing regularly in a frequency of 1 year, in every year we are assessing, or in every 6 months we are assessing, then that means what, okay fine, then the assessment is good enough, we could do the procedures from.
So, audio problem.
So what I was saying, that once you inquire about your management assessment, that is management's own assessment, you will tend to know how serious you are. If I ask you, how do you assess yourself? Are you assessing yourself whether you will be able to complete your syllabus or not? How much revision you will be able to have? Have you assessed? And now, if Nikita says, "Does yes, sir, I have assessed. These are all my plans. This is my schedule. Everything has been going as according to plan. I have also given this much break, gap, and everything." She has assessed. Now, this shows against Arnab. Suppose that Arnab has not assessed as of now. So that shows that I need to pay much focus in Arnab as against Nikita. So that is what here also, if management has done its own assessment, then my inquiry point will be less. But if management own assessment has not been done, then that means what, there needs to be a seriousness which needs to be brought forward in the fraud assessment in the entity. So that is what they are saying. Management is the only person who is responsible for entity's internal control and for the preparation of FS in accordance with applicable FRF. Accordingly, it is appropriate for the auditor to make inquiries of management regarding management's own assessment of the ROF and the controls in place to prevent and detect. If not management, then who else? Because they are only preparing the IC, they are only implementing the IC, right? And then the nature, extent, and frequency of management's assessment of such risk and control may vary from entity to entity. So frequency of management's assessment, nature of assessment, right? Nature also, in depthness, extent of assessment. Is it in depth or is it shallow? And then in some entities, management may make detailed assessment as on annual basis or as a part of continuous monitoring. In other entities, management assessment may be less structured and less frequent. So nature, extent, and frequency of management assessment are relevant to the auditor's understanding. For example, the fact that management has not made an assessment, like kind of Arnab, he has not made an assessment, may in some circumstances be indicative of the lack of importance that the management places on internal control. And therefore, this indication that management is not placing much importance on the internal control, thereby we will be required to perform more of compliance procedure, test of controls. Test of controls will then have to be increased. Are we clear? 3 points. Appropriateness of the management. First, they are involved in IC preparation and preparation of FS in accordance with applicable FRF, and therefore it is appropriate for the auditor to make inquiries with the management about the IC that they have implemented, about the FS FRF that they have prepared. Then the nature, extent, and frequency will differ very entity to entity. From in some entity, frequency could be annually or it could be irregular in other entities. Then similarly, it could be in depth in some entities, but it could be shallow in other entities. In other entities, management assessment may be less structured and less frequent. And then lastly, we will come on to own assessment. Management own assessment help us to evaluate the seriousness of the management with respect to their internal controls. For example, the fact that they have not made their own assessment could indicate what? Could indicate the lack of importance that they place on the internal control. Clear? Everyone with me or not? Or are we just running away? Yes, Rupali is not able to hear you.
Yes, clear, sir.
Yeah, clear?
Yes.
Anyone, any doubt, any sort of thing that you want to address, you want some time to again read. If you're not getting any line, so what we are trying to do is trying to conceptualize each and every line, reason why, and again that will help you in retention ultimately. Now these two is your homework. Let's come to last topic: auditor unable to continue the audit engagement. The amount of fraud is so huge, so much that you're not able even able to continue the audit engagement. Whatever you see, you feel like okay, this might be a fraudulent figure, this might be manipulated, this might be false, or you are in a sense not able to continue the engagement itself. The fraud is kind of such a huge nature. Then you'll have to do what? If you're not able to continue the engagement, then you can do what? Withdraw, right? So first of all, auditor has to determine the professional and legal responsibility applicable in the circumstances. What do you think will be the professional responsibility, and what do you think will be the legal responsibility? If I am very specific about both professional responsibility and legal responsibility, what do you think? First of all, legal responsibility. Your legal responsibility, if you are a company, if you are an auditor of a company, then
So, to comply with the law and regulations are the legal responsibilities.
to comply with the laws and regulation is the legal responsibility. Obviously, it's a very generic answer though, but what is the section in Companies Act that we need to comply with? What is the provision with respect to fraud that we need to comply with in Companies Act?
So reporting
143.12, sir. Reporting
143.12.
under one
Fraud
CRO.
reporting has to be done, na? Fraud reporting has to be done. Communicate to Secretary MCA. Then Lakshmi, Secretary MCA we communicate, not to ROC. Communicate to central government, and central government has delegated that authority to Secretary MCA. ठीक है? So 143.12 legal responsibility has to be complied with in case you are finding any fraudulent situation. So first of all, you will have to report it to the legal requirement as per in accordance with legal requirement. Now again, professional requirement: when you are withdrawing, when you are resigning, I want you to relate it to professional ethics. Do you remember I told you, apart from section 140 subsection 2, that is apart from the communication to ROC, management, and C&AG in case of government company, you will also have to report it to ICI. Anyone, does anyone remember? Resignation also we have to communicate to ICAI. Everyone gave the test, na? PE test. We'll discuss it maybe tonight. We can discuss. ठीक है? If anyone's not having any problem.
No, sir. It should.
Sir, please keep it on Monday, sir, please.
Yes, sir.
Fine. Okay, you have not given the test or what?
सर टेस्ट दे चुके हैं बट डिस्कशन मंडे रख लीजिए ना प्लीज.
Fine. Anyway, are you recalling this point or not? Apart from communicating it to ROC, you also have to communicate to ICI. And this copy of the this communication to the ICI has to be obtained by the new auditor.
Yes, sir.
Yes or no?
Uh,
There was provision with respect to removal of auditor, and there was one provision with respect to auditor resigning. Two separate points were there. It was there in council guidelines, na?
Class 9 of part 1 of part schedule 1.
Clause
9 of part 1 of schedule 1.
clause 9 of part 1 of schedule 1, 9 wine no no 9 139
Of
na.
part,
Yeah, clause 9 139.
So we can connect it to the reporting in case of resignation. Auditor is resigning and he did the audit report for 3 quarters, and he
In
have
case
to
of
give
listed
the audit
entity,
report for the last
LODR
quarters
you are
also.
trying, LODR you are saying na.
Yeah.
You can relate, but that won't be required actually. Unless they ask, they will ask you specifically based on SAB LODR provision. You have to determine whether he has to issue audit report or not for the fourth quarter or for the annual full financial year. And they'll give you the details
Yes,
also
sir.
when they have signed the already signed the financial statements for already signed the reports limited review and report for first, second, third quarter. They'll give you all these details. Then you can also relate this to NOCLAR also. If you are aware about any sort of non-compliance with law or regulation, then you should report accordingly as per NOCLAR. But already we are reporting as per Companies Act 14312. Fraud reporting is applicable, right? But here
Right,
is
sir.
this is also your professional responsibility. That is what I wanted you to focus on, both the words actually. For that matter, I was focusing professional responsibility and your legal responsibility. So professionally you are also responsible for communicating. If he considers that there are professional reasons connected with his resignation for not offering himself for reappointment, he shall send a copy of such communication to the institute. So we will first of all send the communication to BOD also, and the same copy shall also have to be submitted to the ICAI. That is his professional responsibility. ठीक है?
ठीक है सर.
So what was I saying? Auditor unable to continue the engagement. Auditor unable to continue the engagement, then he shall determine the professional and legal responsibility applicable in the circumstances, including whether there is a requirement to report to the persons who made this appointment, persons like regulatory authorities, and definitely you will have to refer to this ADT4 form ADT4, in which MCA secretary has to be submitted in ADT4 if the amount of fraud involved is more than 1 crore. Similarly, 143 subsection 12, and then consider whether we will be withdrawing from the engagement. And again, if withdrawal, then again you will have to specify section 140 subsection 2 accordingly. ठीक है? Important question है. Many frequency is high for this question asked in exam. Lastly, there is one point I've given. Also mark this as probable future question, because if at all they want to ask a new type of question, they can ask probably from here example of circumstances that indicate the possibility of fraud. So these all are examples, and in each example there are 5-15 examples more given. So if you want to go dwell into each examples, you can refer bare standards, but I don't think that much depth is required. What you can resort to one additional question that I have put from the bare standard directly. If at all they ask, just remember what a question is. Question is circumstance that indicate the possibility of the fraud. So what are the examples of these circumstances which indicate the possibility of the fraud? So discrepancies in the accounting records. Accounting records are not proper, or you can say missing evidences, unusual relationship between auditor and management, and then unwillingness by the management to permit the auditor to meet privately with TCWG. That is, management is not allowing the auditor to meet with TCWG because he is afraid that auditor might report something adverse to the TCWG. TCWG is what? TCWG is like the board of directors. Management is like the managers who are managing the entity. Then accounting policies that appear to at variance with the industry norm, frequent changes. These are coming under others. ठीक है? So just have this in one sort of, you can have this in mind. Go through this, very important. And this is also not yet asked. Response. Just now we assessed what? As per SA 315 and as per SA 240, we assessed the fraud risk factor, right? Fraud risk assessment we did. Fraud risk assessment here. fraud risk assessment. We did fraud risk assessment. Now after assessing the fraud risk, you will then have to respond also as per SA 330. I told you will have to respond in accordance with SA 330 as per SA 330 by performing further audit procedures. So overall response, auditor has to assign and supervise personnel as per their capability, whether accounting policies adopted indicate any fraudulent financial reporting, whether there is any surprise element involved in the nature, timing and extent of audit procedure. That means you should surprise the auditee. Surprise checks should be there involved in your audit procedures. It should be there. Surprise cash check or surprise any sort of check. Then response to assessed ROMM due to fraud at the assertion level. What you will respond? Responsive to the assessed ROMM due to fraud at the assertion level. You will have to then determine further audit procedure for that. Similarly, responses to risk arising related to management override of control. Then you will have to check how can you manipulate the internal controls. How can you override the internal controls? What are the internal controls lacunae at? What are the lacks in the internal controls? So all these points you will have to see while responding. Essay 240. The question will be framed in a different way. Here they will specifically ask about fraud risk, and then they'll give you that you have done the risk assessment. You have to now respond by performing further audit procedures. Then specifically essay 240 will come. Are you getting it, everyone? So yes, let's take a break. 12:30 will meet. 12:30 will meet. Till then, can have your lunch and mark this also as homework, or if you can do now, you can do now also, or you can take it as homework. But do very very important, all each and all and each and every question of this essay 240. Try to read the question and try to see what answer it should have been, and then check the answer that I have given. Again, as I told, answer I have also told what any other further points that was there in the suggested answer. So unlike normally, suggested answer will include what the main topic and also the important conclusion. Plus auditor unable to continue also will come. In addition, auditor should consider the requirement of 143.12. Caro reporting also you have to see that, check whether if the question is about company, then you will have to also answer in accordance with section 143.12 fraud reporting. If you are resigning, then 140 subsection 2, and in the fraud reporting you will also have to refer Caro clause 11. So just remember for now that Caro reporting also has to be done in fraud reporting. We'll later on discuss on Caro what exactly is to be reported under clause 11. So let's take a break. We'll meet at 12:30 and start with essay 250 then. Till then, if anyone wants to revise, take a break, take a short nap, take lunch, whatever. ठीक है? चलो, let's start with essay 250 now. Please go through the questions. ठीक है? Go through all the questions that is there in the standards just at the end, and come back with any sort of doubt that you might have. And specifically for essay 240, it's very very important for you to go through all the questions of the essay 240. Now let's come to essay 250, consideration of law and regulation in an audit of financial statements. Consideration of law and regulation. Consideration of law and regulation in an audit of financial statements. In an audit of financial statements. In an audit of financial statements. So as I told you earlier also, I believe in while I was telling you about NOCLAR, I told you there are two sets of law, particularly which an auditor is concerned with in accordance with essay 250. Two sets of law. One is direct effect wale laws, and the other one was indirect effect laws. So direct effect laws means what? The laws which directly affects the figures of the financial statement. Directly affects the figures of the financial statement. Direct effect wale laws. Indirect effect laws could be the laws which do not affect the financial statement. However, complying with those laws and regulation is equally important for you to stay operating. For you to stay operating. Example, PF Act, labor laws. Example, if I say in labor laws, Provident Fund Act. Now this act directly affects your financial statements. The compliance with this due date of payment, penalty amount, whatever be, this act directly affects the financial statements, PF. However, child labor act, child labor act, it does not affect your financial statements directly. However, if you fail to comply with the provision of child labor act, your factory might be shut down by the authority, by the order of the authority, right? So it is important for you to stay, in order for you to stay operating, you need to also adhere to what? Indirect effect laws, indirect effect wale laws having indirect effect, not having direct effect. So that is what effect of laws and regulation. It says provision of some laws and regulation have direct effect on the FS, in that they determine the reported amounts and disclosures. They determine the reported amounts and disclosures. However, some laws but are there but do not have a direct effect on any entity's financial statement. Some entities operate in heavily regulated industry, such as banks, chemicals company. So this banks, chemical company can have what? Other environmental protection act related laws, regulation, and therefore suppose high chemical industry, even though it is not affecting the financials directly, impacting directly, however non-compliance of such an act will might affect the operation of the entity. ठीक है? So non-compliance with law and regulation may result in fines, litigation, or other consequences for the entity that may have a material effect on the FS. That is what we are concerned with. That is non-compliance of laws and regulation. That is what we are concerned in SA 250. So first of all, what do you think is the, who do you think is the responsibility lies of with respect to compliance with laws and regulation? Whose responsibility do you think it is? क्या हुआ आफ्टर लंच? लंच इफेक्ट, आफ्टर post lunch effect?
Management's responsibility.
It is the responsibility of the management, right, to comply with all the laws and regulation. It is the responsibility of the management. So now it says this question again, this question was also again asked in my attempt. ठीक है? What does this say? What is the procedure in an entity that is the entity may implement so as to assist in the implementation or prevention and detection of non-compliance? That is to implement compliance with laws and regulation, or negatively if we say, that is to prevent and detection of non-compliance. What are the procedures that an entity might implement, that an entity may implement? So you need to monitor your legal requirements. Now you can also engage legal advisor, which will assist you, advise you what laws is applicable to this entity, which accounting standard or which other laws is applicable you should comply to, or any sort of legal advisor. And then register of significant laws and regulation. So you should maintain a register where all significant laws and regulation which is applicable to your entity is thoroughly written there, so that you don't forget, so significant laws and regulation का एक register होगा with which the entity has to comply within its particular industry. And then instituting an appropriate system of internal control. This is also very important for the compliance with laws and regulation. Definitely there will be so many internal controls with respect to, suppose, direct tax audit report. So tax audit report 3CD we used to do in LNT. What I used to check that 3CD who is the maker, and the checker of 3CD is someone else, SOD. There are so many internal controls in tax, direct tax, or even in any other act, PAMLA, Foreign Exchange Management Act, Customs Act. So each and every act used to have their own internal controls. So proper system of internal control is mandatory for you to prevent non-compliance with laws and regulation. And then developing, publicizing, or following a code of conduct. This is important. Pay attention here. These last 3 points, very important. This you will come across. This last point you will come across in many situations, in many places of, in many questions you will come across these 3 points. First is developing a code of conduct. That is developing a manual, developing a proper training manual, code of conduct, or where each and every law and regulation applicable to the entity is specifically mentioned, all the provisions, relevant provisions, other thing, everything specifically mentioned. Then ensuring that the employees are trained on the code of conduct. Employees are trained on the code of conduct. They know the code of conduct thoroughly in and out, and then they are also willing to comply with this code of conduct. They are trained and understand the code of conduct. They are made they made understand the code of conduct, make them understand the code of conduct, and also train them. And then lastly, monitor that they are following also. Not just that we have trained, now we have also to monitor that they are following the code of conduct, and if not they are not following the code of conduct, then we can take disciplinary action against them. So it's very easy, it's in the flow. You have to develop, publicize means what? Put it in the notice board if of the entire organization, put it over mail. Everyone should be aware about such a code of conduct. So publicize, develop, and what? Following a code of conduct. Then ensuring employees are properly trained and understand. And then lastly, monitoring the code of conduct and acting appropriately to discipline employees who fail to comply with it. So let's just try to learn this answer. First is with respect to, I'll do what? I'll for legal and legal requirement monitoring. For monitoring the legal requirement, I was not able to actually properly monitor the legal requirement. So I did what? I engaged a legal advisor. For monitoring of legal requirements, I engaged a legal advisor. So he advised me to maintain a register of significant law and regulation. He advised me, the legal advisor advised me to maintain a system of law, a register of law and regulation, and also to implement a proper system of internal control. So I did that, and also I did what? Following, I did implemented a code of conduct. I did implement a code of conduct and made sure that the employees are trained, and also they are much aware about this code of conduct. Then again, I'll monitor it that whether the code of conduct is complied with by all the employees or not, and if not, then appropriate disciplinary action is being taken or not. So that is your whole framework. What is the question? What was the question? What was the question for this answer, Nikita? Question, what was the question?
To complete it.
ठीक है. So the question is what? The question is procedures an entity may implement to assist in the prevention and detection of non-compliance with laws and regulations. And the answer is, first I will have to monitor my all the legal requirements. Therefore, I cannot do so. I appointed what? Legal advisor. Engaged a legal advisor. He advised me to maintain a register of all laws and regulation that is applicable to the entity. So I did that. Then he also told me to implement a proper system of internal control. Along with that, in addition to that, I also implemented a code of conduct, developed it, publicized the code of conduct, and trained. Then I started training the employees and also making them aware and understand the code of conduct. Lastly, I monitor them whether they are following the code of conduct or not, and in case if not, then proper disciplinary action is being taken. Clear? Very easy. Yes or no?
Yes, sir.
Now comes auditor's consideration of compliance with LR. So auditor's consideration, I've already told you. Earlier what we used to see, FRF, financial reporting framework in normal standard. Here we will see what? LRF, legal reporting framework, legal and regulatory framework. Legal and regulatory framework applicable to the entity. What set of laws are applicable? What sort of rules, regulation, guidelines, circulars, acts, what sort of laws are applicable to the entity and the industry also, or sector in which the entity operates. So that you have to assess. This is what consideration that we are complying with LR. We are complying with LR. For that, what all considerations you as an auditor make, and then how the entity is complying with the framework, right? Now we'll bifurcate our consideration in two parts. We'll bifurcate our consideration in two parts. One is direct effect clause, and the other one is indirect effect. So what does it say for direct effect wale laws? The auditor has to obtain SAI regarding compliance. Important, mark the word compliance. Mark the word obtain SAI. The provision of those laws and regulations generally recognized to have a direct effect. For those laws and regulations that generally tend to have a direct effect on determination of material amounts and disclosure. On determination of material amounts and disclosure. That means what? This will have a direct effect on determining your important amounts, your important disclosure requirement, material amounts and disclosure, material amounts and disclosure. That is for determining of material amounts and disclosures in the financial statements. So auditor has to obtain what? SAI. For direct effect wale laws, auditor has to obtain SAI with respect to compliance. Important. Now let's see what does for indirect effect clause, what does we have to do now? The auditor shall perform the following audit procedure to identify instances of non-compliances. And for that non-compliance, you can do what? You can do what? Audit procedure to identify, that is II, direct effect wale laws. You are obtained psi with respect to compliance. For indirect effect wale laws, perform what? II. What is II? Inquiry of the management, inspecting of the correspondence with other relevant regulatory authorities or licensing authorities. I'll tell you in detail again, but let's just complete this up. Indirect effect wale laws के लिए we will perform II regarding with respect to yes, with respect to in indirect effect wale laws, are we checking compliance with all the laws or regulation, or are we checking non-compliance if at all there was an instance of non-compliance? Quickly tell me. In direct effect wale laws, we were checking compliance of all the laws and regulation, right? But in indirect effect wale laws, are we checking compliance or non-compliance? That means
Non-compliance, sir.
so as an auditor, for as an auditor, where do you think will be the audit procedure will be applied more, in direct effects or indirect effects? Yeah. Yes, everyone.
So
Where do you
might be
think?
direct.
Where do you think?
Direct effect.
Direct effect, right? Because for a compliance, for checking the compliance, you have to go through for each and every entry, each and every item, right? That this is compliant, compliant, checklist kind of say. But for indirect effect, non-compliance, you can directly ask regarding any sort of non-compliances. Inquiry you can do with the management. That is inquiry you can do with the management, and or inspecting the correspondence with the licensing authority, legal authority, regulatory authority. You can directly go to RBI and ask whether this entity has paid any penalty or filed any returns delayed, any sort of non-compliances that you can think of, right? You can directly ask and correspond with the relevant legal, regulatory, licensing authority. So non-compliance, you have to check here what non-compliance first of all, and specifically with respect to what II. Clear? Any doubt? Any doubt? Mark the difference. Difference is clear. For direct effect value laws, we have to check the compliance with laws and regulation. Compliance. For that matter, we'll obtain psi. But for indirect effect value laws, we'll have to do perform what? Inspection, inquiry, investigation. And for that matter, we'll employ another CA who is going to check only non-compliance, non-compliance, not any CA, but here we have to only check what? Non-compliance. Clear? Yes or no?
Yes, sir.
Everyone else is sleeping or what? After post lunch, are you feeling sleepy?
No, sir.
No, everyone.
No, sir.
So read these two lines. Point number two, and point number three. So point number three, generally for non-compliance, what I was saying that you will perform specified audit procedure. Like directly you can inquire with the management and check about any sort of non-compliance, or directly you can inspect with the correspondence with any licensing or regulatory authorities and ask whether there is any delay in filing of the returns, whether there is any penalty being paid, whether interest paid on late payment, any sort of non-compliance you can come across by just asking with the licensing or regulatory authorities. Clear? So one difference is in compliance, non-compliance, and the other difference is with respect to audit procedures that you are gonna perform. Are we clear? Any doubt? Any doubt? Any doubt? Okay, so now come to audit procedure when non-compliance is identified or suspected. So now you have identified or suspected a non-compliance. Okay. So now what you will do, whenever an auditor becomes aware about any information concerning an instance of non-compliance, then auditor shall obtain an understanding of the nature of the act. First of all, the act that you committed, the non-compliance act that you committed, what is the nature of the act? And also it could be what is the nature of the act. Is it a civil act or a criminal act? So is it the offense or any sort of non-compliance you committed, is it under civil or criminal nature? Then the circumstance in which it has occurred, why, in which circumstance, why it has to occur, why it has occurred, and further information to evaluate the possible effects on the financial statements. Further information to evaluate the possible effects on the financial statement means what? What does this non-compliance might have an effect? What effect does this non-compliance can have on the financials of the entity? So we'll just go through each and every point and try to recollect. I'll just quickly tell you one story. Suppose example, you murdered someone with a knife. Okay. So nature of the act was, you could say, is of criminal nature. Nature of the act is criminal, and the circumstances, you can say, is of self-defense. Now, does this have any positive effect or possible effect on the financials? No, it doesn't have any possible financial effects, right? Now, if the auditor suspects that there may be a non-compliance, then auditor shall discuss the matter with management and distributors. Now that you perceive that yes, okay, it is a non-compliance, I should not have killed anyone with the knife, then you should discuss with what? TCWG, management. And agar management or TCWG also do not provide sufficient information, discuss TCWG management, tell them to provide and tell them to provide information. If not provided, then do what? Obtain the legal advice. If not provided, then obtain legal advice. So again, once again, what is the nature of the act? Criminal nature of the act. Under what circumstances were you required to commit the act? And then obviously you will have to determine whether does this act have a positive effect, possible effect on the financials, possible effects on the financials, right? Then you will have to discuss with the TCWG management whether this needs to be reported or what needs to be done. And then if the TCWG management does not provide relevant information, then you can straight away go to obtain legal opinion. And if you are not even able to obtain legal advice, then you can simply do what? Auditor's opinion para. You can simply see them in the auditor's opinion para. Just you can mark that as qualified, diversified, adverse or disclaimer, whatever be your opinion. ठीक है? It's an important question. Procedure when suspected non-compliance, suspected or identified non-compliance. Very, very important question. Just go through this once again. Please, please, please. This one, very, very important. And the second one, indicators. Please go through the indicators also. I'll just simply directly tell you, or I'll simply directly give you the trick to remember all the points. Go through the indicators once. Indicators of non-compliance, that means what? This type of question generally come in IPCC also, but in final also, whatever indicators they have given in standards, they generally tend to ask. So indicators that needs to be considered for verifying compliance with LR, that means you will have to verify the compliance with laws and regulation. So what all indicators can you consider? Think of the points that you can consider as an indicator, and then tally with your suggested or institute answer also. So think of it from the first line. What do you think? Yes. Yes. No, no. Have you gone through this indicators?
Yes, sir.
Yes,
Okay,
sir.
everyone. So let's see what they want to sing. That these are all the indicators, right? That you can, that they will indicate that yes, there are certain non-compliance, any sort of non-compliance of laws and regulation. These indicators will be indicating it to you. So if there is an investigation, income tax department has come, then it won't be just simply visiting your home, right? It will be certainly visiting for a specified reason. Similarly, when you are paying for unspecified services or loans to consultant, related party, employee or government employee, that means what, those are not in the ordinary course of business, could not be an ordinary course of business, could be the case. And then the sales commission which appears excessive in relation to those ordinarily paid. So normally you pay rupees 100 per order, now you are paying 250 per order, which shows what, no, it is not in the ordinary course of business. Then purchase at significantly above or below market price. So purchase price below or above market price. Sales commission purchases, unusual payments in cash, purchases in the form of cashier checks. So cash purchases, as you know, section 40 capital A 3. So if at all there are lot of cash purchases, then again this section could be violated or any sort of non-compliance can be there. Then legal and retainership fee. How does this show that there could be a non-compliance with LR? Unusual payment towards legal and retainership fee. Very easy, right? Why this point can indicate to us that there could be a non-compliance? Yes, quickly.
So payment to lawyers.
So lawyers, legal, why will you hire them? Because you might have acted some wrongly, right, in a wrong manner. And for that matter, for covering the non-compliance laws and regulation, you have hired lawyers or any other sort of fees that you are incurring, legal and retainership fee. Similarly, payment for goods other than the country with which the goods or service originated. So you must be aware about this in the Customs Act. So what we used to do is we used to import from those countries where excise custom duty is very less, and for that matter we knew that suppose from Malaysia if we are importing, it's less as compared to US. So we'll tell that first of all US wala bande ko will tell ki import it to Malaysia, and then from Malaysia we will import. But Indian government is very very clever, not more than you, but is clever, and therefore they disallowed this. They told that no, this cannot happen. You will be levying the duty as per US only. You will be levying the duty as per US only. So that is how you tried to manipulate. Then you tried to manipulate that you paid for goods or service other than to the country with which goods or service you have originated. So you paid to suppose Malaysia, however the goods originated from US. So this is a non-compliance. This is a non-compliance. You paid to another country other than the country from which the goods originated, and then without proper exchange control documentation, existence of information system that fails, unauthorized transaction, adverse media comment. Adverse media comment. Okay, so what I have done is I have tried to go through a story by which you will tend to recognize almost of all the points. So there was a news which was going, news from news which you will get what, adverse media comment. Adverse media comment. There was a news, the news was regarding two IPS officer. So two IPS officer went to Dubai or some other country, and they paid to some other another country. So went to purchase the goods from other country and paid to another country, that is other than the country from which the goods originated. Went to other country, and therefore they were directly shot dead because of this non-compliance. They were shot dead and they reached to heaven, tax heaven. So you are, if you are engaged with the countries which are tax havens, if you are engaged with the companies which are registered under tax havens, then again there could be a case of non-compliance also. Similarly, two IPS officer, right, two IPS officer were there. So one investigation is being carried out, P for purchase at above or below market price, and C for sales commission which exceeds the market rate of sales commission. Market rate of commission से ऊपर sales commission दे रहे हो, so I for investigation, P for purchase, S for sales investigation. Then here IPS is a bit different, so here I is improperly authorized transaction. Improperly authorized transaction, this last second point, improperly recorded transaction. Then payment for unspecified service. So payment for specified service is okay, but for unspecified service to related party, all these payments does does involve a question of doubt, right? And then lastly, system failure. If at all there is a system failure, thereby designing an adequate audit trail is not no more now present, then that might indicate a system of non-compliance with laws and regulation. Are we clear with the all the points and also how to learn? The adverse media comment, it can you can start with the last point of the answer, adverse media comment. So news was coming, and in the news it was popping that two IPS officer went to some other country and goods and paid some other country. However, they were shed dead and sent to tax havens. And then IPS we have 6 points. And also you can add, from this payment, this payment is made in cash payment. So you can also you'll tend to remember what cash payment wala point. It is disallowed, it is not good for the economy and everything, blah blah. Clear? Any doubt? You'll tend to recall all the points. Shall we move ahead, or you want to write this, or can we move ahead?
1 minute, sir. I want to write it down.
Chalo. Then reporting of identified or suspected non-compliance. Now you have identified the compliance or you have suspected the non-compliance. Then if they ask you the procedure,
Audio
audit
issue, sir.
procedure, then you will
Please.
write
Done,
this.
sir.
So what was I saying? That if they ask you audit procedures, with respect to non-compliance is identified or suspected, then you will write this answer. That murder wala. Knife, murder with knife. And but if they ask you reporting requirement for identified or suspected non-compliance, then you will resort to this point. Are we clear? Reporting versus audit procedure. So in the question last time they will tell you reporting requirement as per SA 250. Or as an auditor, what will the auditor do? Simply if they ask what will the auditor do, that means what procedures will the auditor perform. So you'll write audit procedures, not reporting. So reporting here, reporting non-compliance to TCWG. We have divided this reporting in three parts. Firstly to TCWG, secondly to the shareholders or the readers of the annual reports, and lastly, thirdly, to the regulatory authorities. Like CNAG, MCA and all. So reporting non-compliance to TCWG, unless all of TCWG are involved in the management of the entity, auditor has to communicate with TCWG. That means what? If the management or TCWG are different, then you will communicate to TCWG. Unless management and TCWG both are same, then you can communicate to management or TCWG, doesn't matter, both are same only. It could be the case with small businesses, proprietorship business, where management, I am the only manager, I am the only TCWG, or that is board of director, right? So that is what they are saying. Unless all of TCWG are involved in the management of the entity, auditor has to communicate with the TCWG matters involving non-compliance with LR. Then if in the auditor's judgment non-compliance is believed to be intentional, this looks like intentional misstatements or intentional omission or any sort of intentional mistakes and material as well, then the auditor shall communicate the matter to TCWG as soon as practicable. So again, if I try to summarize this, so first of all, communicate with TCWG. We have to communicate with TCWG. Fine, remember this. We have to communicate with TCWG. Then if non-compliance is intentional, then report to TCWG ASAP, as soon as practicable. Now, if the auditor suspect that management or TCWG are involved in the non-compliance, now you will do what? You were trying to complain to TCWG. Now you got to know that management TCWG both are involved in this fraud. Then what can happen is you can go to audit committee, next higher level of authority at the entity. So thirdly, if management TCWG both involved, then what? Then what? Communicate to next higher level of authority. ठीक है? Okay or not? Yes. Then you will report the non-compliance in the auditor's report on the financial statements. Financial statement, that means for readers of the financial statement, readers of the annual report, that means shareholder. So agar auditor concludes that the non-compliance has a material effect on the FS and has not been adequately reflected in the financial statement, that means what? Non-compliance had a material effect. Non-compliance is there. You have not detected the non-compliance, that is different thing. But this non-compliance was also material non-compliance and has not been adequately reflected in the FS. That has to be reflected now since it is material. So auditor shall issue here in this case, since he is not able to conclude, or sorry, if I said it opposite, he concludes. So by concluding means what? Concluding, when will you conclude? When you have obtained the SI, right? Yes or no? When you obtain the sufficient appropriate audit evidence, then only you can say conclude. So here you will be charged, you will be having to express a qualified or adverse opinion. You will be having to address, you will have to give an qualified or adverse opinion. Secondly, agar if auditor is precluded by management or TCWG from obtaining SAI, the auditor shall express a qualified opinion or disclaimer opinion. Definitely, if there is a limitation on the scope of work, if SAI is not available, then you will issue a disclaimer or qualified. Simple. Now, if the auditor is unable to determine whether non-compliance has occurred because of limitation imposed rather than the management or TCWG, then the auditor shall evaluate the effect on the auditor's opinion. You have to evaluate the effect that it have on the auditor's opinion. Clear? And then to the regulatory authorities, you can just go through that. So fine, we'll do till 250. I think everyone's exhausted. Doesn't all looks a bit pale. So did you get a ton of information today? I am just checking with you all so that you revise. Did you get a ton of information?
Yes, sir.
Might be more than that, sir.
So you'll get tomorrow again same information. I'll communicate the timing, but mostly you all prefer in morning only, right?
Yes.
Okay, sir.
Fine. So I'll communicate the timing. It could be from 8. It can be from 8 a.m. Um, and then we can see till when can we conclude. So 260, 65 and 299 will take some amount of time, and then we will try to finish it off essay 300 ki series, and then let's start with chapter 3 day after tomorrow. So tomorrow we'll target with 300 series and essay 265, 260 and 299. ठीक है? Revise. Please revise. Standards on auditing is in a glimpse of time it will evaporate. Whatever comfortable position that we have arrived as of now, it's just a matter of time it will evaporate. So I have to revise. ठीक है? Fine then. Anything else? We are then running a bit late. That is for sure. But fine, we'll see when can we cover. I might not be available for. Okay, Monday we have to discuss anyway, right? Class test. So anyone who has not given the test till now, please do give them. Okay. Monday we are gonna discuss definitely. And then essay 200 ki series and SQC1. Essay 200 series and SQC1. This test we will have on Wednesday. ठीक है? Cool.
Okay, sir.
चलो फिर.
Bye, sir.
Bye.
Okay, sir.
Have a great weekend.
Thank you, sir.
Welcome.
Thank you, sir.
Thank you, sir. Bye, sir.